Couple minutes. I already shared.
Thanks so much. And we're live. Welcome back, everybody, to another exciting episode. We have with us a very, very special guest who was kind enough to come on. He needs no introduction, but we could give him an introduction anyway. He's a Hex OG. He is a very intelligent person, to say the least. He very outspoken and is a man of many accomplishments, most prominently the Furufinance Award for the #1 RH ecosystem Twitter account. How you doing, Johnny? Thanks for coming on.
Well, I'm doing fine, man. Enjoy your content.
Thank you. Appreciate it. I guess we could just start out with you giving an introduction, even though you probably, everyone that's watching this knows you very well, but for the sake of the interview.
Introduction. Hi, I'm the anti-influencer. I've been kicking the butt of influencers since day one. And that's kind of my thing.
Fair enough. Fair enough. Are you able to elaborate on maybe the tag anti-influencer?
Yeah. So when I first got into crypto, like most people, you are amazed by things that you don't have knowledge of yet, right? So, like the birth of the influencers back in 2017 was literally people that were enthusiasts about crypto, and they made a lot of rationales for why they believe things did what they did. And later, as time goes on, you start to figure out, wait a second, these are guys with a camera and a microphone. They don't know what the hell's going on. They're just filling a niche. They're entertainers. They aren't actually more knowledgeable. They don't actually know what's going on. They actually make a lot of excuses for why they believe things are going on. And I realized over time how damaging this actually was. The hot picks of the week and leverage trading being shilled down everybody's throat, and really the breaking point was when I had been following Hex from the very start, and I was about ready to quit crypto altogether because what I was looking for simply didn't exist.
What were
And
you looking for?
I was looking for some way to earn my own coins. I mean, literally, just a way to earn my own coins, whether it was mining, whether it was staking, whatever. I was looking for some source of passive income that I was in control of and that nobody else could take from me. That's what I was looking for. And when I discovered Richard Hart, I found out that pretty much that's what he was wanting to build. And skeptical as I was, I looked at it and said, okay, all right, if this guy really does what he says he's going to do, then this is cool. I'll give it another go. And as the development happened and realizing what was being built, I noticed that there was a large coordinated attack of influencers uh, just fudding the crap out of it. And I'm like, whoa, 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 whoa. And that really, to me, exposed the fact that these people did not know about code. They didn't understand how finances work. They couldn't understand the system because literally their business model was nothing like, you know, I thought it was. It literally was opinions for sale, positive or negative opinions. They could be bought either way, and they did not care what they told people as long as they were getting a paycheck for it. So that really kind of revved me up, and I really started questioning everything that they were saying, really going back and checking their homework, really going back and say, wait a second, these guys said this about this coin. What did they do? How well did it perform? And you start to see a pattern. Nothing seems to be working. The only thing that seems to be working is they're being able to sell their pre-allocation on everybody else's heads and making money while everybody else is suffering. So that's kind of what triggered me. And the fact that they were bashing on the thing that could change that really set me off. So, part of me and other Hexicans, we started calling influencers out on their past calls and how this is a good product and how this is a good product and blah, 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 blah. And nothing ever seemed to pan out.
Yeah, very, very, very interesting. And I think in very many ways, I share the journey you did, albeit a little bit later, which is why I ended up getting in on higher prices. But people, and that's fine. But people think that, like, that's why it was one of the things that I mentioned is the importance of research and being able to think critically. And it sounds very cliche, like you got to do your research and you got to think for yourself. But if you don't understand blockchain and you don't understand the motive behind these people on YouTube, these influencers and things like that, you will inevitably end up in the meat grinder. Like that's just how it is. And the tragedy is that most people don't, make it this far. They end up just getting wrecked and gone forever.
Yep. And again, people are fascinated by people that know things that they don't. Okay. And just because somebody knows something that you don't does not make them smarter than you. It means they know something that you don't. Let's take an example here. Okay. There can be a guy that knows all the trivia in the world. He could go on a game show and have all the answers. And you're like, wow, that guy's really smart. And that same guy might not even be able to tie his damn shoes. So knowledge is not necessarily always practical. Being able to retain information is not exactly the same as being able to actually apply that information that you have. You can know how something's done, but do you have the ability to actually execute it? So we've got people that are critics that have degrees in blockchain, but what have they built? Nothing. Why have they never built anything? If they are so confident that they know how things should be built, where's their product? So it's funny. We got a world full of people going, I can do that. Well, then do it. Prove it. You can't because you don't have the ability. You might have the knowledge, you might have the understanding, but do you have the ability? If you don't have the ability, sit down.
Yeah, fair enough. Fair enough. Um, yeah, practicality, pragmatism, is important, and that's actually, if I could, go on a little tangent, I didn't prepare this one, but there's this talk about, Charles Hoskinson and
Mm-hmm.
Richard Hart having a forum, whatever. And from the way it's unfolding, you have Hoskinson, says that he doesn't want to talk to Richard Hart because Richard threw mud. And I'm thinking, as the guy sits in front of he sits in front of his screen and he talks a lot. He wants to change the world. He wants to change it in this. He wants to do this. He wants to do that. He wants this plan in blockchain implemented. This plan. They're having a lot of trouble with Cardano, like just getting the ball running and getting people to build on it and use it, And on top of that, it's like, if you're so serious about changing the world, like you need to work with other people, you need to get outside the box, and things like that. And refusal to do that because some petty feud that happened, a couple of years ago. I mean, that kind of shows me
I
you're
don't think that
fundamentally
has anything to
unserious.
do with it. I think it has to do with the fact that he doesn't see there as being any gain, and he's just going to continue doing what he's always done. And Cardano is just going to do as it's always done. You've got people that have the biggest ideas in the world, but they don't necessarily have the ability to put it into action, or the interest in actually putting it into action. Like, let me give you an example. I've had people come in that are just starting out doing art stuff, and they're like, I'm going to make a whole line of products. Are you? How many products have you made? Well, I just made this one mask. Okay. Right. So where's your line of products? To do that, you have to take the steps to get there. You can't just assume that time's going to pass and these things are going to happen magically all by themselves if you're not the one putting in the effort. So if you're not sculpting every single week, you can forget about creating a line of products because you haven't even picked up the sculpting tools. It's great to have ideas and dreams of what you may or may not do. But if you don't put if you don't put in the effort to actually achieve these things, or they're just ideas. They're just ideas. They sound good. They get people excited. But it's like a lot of people expect somebody else to do stuff for them. They just want to throw the ideas out and let other people do stuff for them.
Fair enough.
In a way, that's what I do. I throw ideas and concepts out there and let other people that want the spotlight to take those ideas and apply them or discuss them and carry them farther. But if you are really trying to change the world, then you have to take an active part in that. You have to actually take the steps. You're going, like you said on one of your shows, you're going to have, if you really want change, you're going to have to go head to head with opposition. You're going to have to make allies of people that you wouldn't in order to get your goals resolved. You have to make sacrifices if you want to go forward. You only have so much time in a day. How are you allocating it? Is it changing the world by talking to random people on Twitter? Not really. If you talk to the right people and they take that message farther, then yeah. But you gotta take the steps to get there, right? Nobody's an overnight success. It takes 30 years to be an overnight success. Sorry. And people can't even wait a year for a crypto to turn around.
Yes, there is
It's
Yes, I agree with that 100%. So I guess to get more into the crypto thing. So tell us about Hex, how you see Hex, like what you view it as, why you find it to be so special. Just take it away.
Well, I checked in the mining, right? And I did the math to try to figure out, would it be worth doing it? I had an option to buy skids and skids of ASIC miners to do that because I thought that this was the only way to do it. It always seems silly to me that you had to have a specific type of equipment. You had to pay stupid amounts of money for something that's literally nothing but a paperweight because it only has this one purpose. And the fact that it loses value the moment that you buy it. It loses productivity the moment that you start running it. So it just seemed like a money pit to me. And again, I was looking for something that would generate some sort of passive income. And when you come across Hex, it's like it's playing a video game that takes out the monsters, inserts a stopwatch, and then at the end of that stopwatch timer, you get a reward. I mean, it's really just that simple. But see, the problem is people like their monsters to fight. They feel compelled to action. They've got to do something so that they feel like they're doing something. And then, but in crypto, the funniest thing is about that, if you do have the right product, then the best thing you can do sometimes is nothing. Just wait. So really, Hex creates a larger adoption space where anybody can participate with a limited amount of money, no barrier to entry, no special equipment to buy, no facilities to upkeep, no components to upgrade, no overhead, no employee costs to monitor. It's all profit, right? You have to pay your fees to get in and out, of your contract, but it's all profit for the most part. And the fact that not everybody can participate in Bitcoin, and we're seeing it now. We're seeing Core Scientific and Iris Energy, Mikey's good old places, going bankrupt right now, right? Because they don't see that eventually the cost outweighs the production, and if the price goes down, they're in a hole. And Hex, you can just hold the coins. If you're in a position where you don't need to sell, that's when you're in the position where you're going to make the most profit. When you're able to set your own prices and say, look, I think this is worth this much, and I'm not taking a dime less, right? You have the power. But when you have to sell because of negative externalities, and you've got upkeep, and you've got loan, and you've got employees, and you've got all this, it's like literally digging yourself a hole that you're never going to get out of. So it's kind of, Richard says it's proof of waste. Well, It is. It's literally proof of waste. And people feel that they've got to lose something to gain something because that's how we're programmed. We're programmed that there has to be a cost. It can't be this easy. It doesn't make sense. We've got to do something. We've got to be compelled to action. Waiting is silly. Uh, People that are highly motivated people, their rewards from life come from being active, right? You don't get in shape if you don't go to the gym, right? You don't get the job if you don't call them off the hook and make sure they know you that you're alive, right? You don't make any money if you don't get out there and hustle, right? So we're trained and compelled to action that we have to do these things. We constantly have to be shifting, and then in moments of boredom, that's when we get out of our positions or we start shifting and we start moving around because we feel that we need to be doing something. But with the right crypto, the best thing to do is forget you have any. Be in a position where you can afford to forget you have any. That's the thing. It's not a lottery ticket. It's a waiting game. You know, 4-year cycles. It's a waiting game. If would you even know if the price was down right now if you didn't look? You know, would you know? You wouldn't know. You bought a thing because you bought a thing. You expect that thing to go up in value. Does it really matter whether or not people are selling theirs at a discount right now? Eventually they run out. It's like even if you bought toys, okay? You know, I bought up like supplies. Some I paid more for, some I paid less for. But guess what? Eventually everybody else opens up their boxes and I'm the one sitting there with the mint conditioned unopened boxes, right? Same sort of thing. I'm in a position where I'm not dependent on that sale and I can sit on things for years until the price reaches a point where I am willing to sell. That's where you have to be in a position, not dump everything that you got and mortgage your house and go crazy and put everything in. You need to be in a position where you don't need to sell. That's where the advantage is. So two people made money, most of the money in Bitcoin. It would be the people that were in a position that they didn't need to sell, like Richard, where he had enough money, regular income, that he did not need to sell his Bitcoin. As far as he was concerned, it was a collectible. He didn't sell it until it reached the 65,000 top. We've got video evidence where he was upset with himself because he didn't sell $20,000. So those people made money. The other people that made money on Bitcoin are the absolute idiots that forgot they even held it and found it later. So you've got two ends of the spectrum. The people in between that tried to build businesses and do all this extra activity and trade and leverage and all this stuff, they got wrecked. The people that forgot and the people that were in the position that they didn't have to sell, those people did really well. Fortunately, Hex is designed in such a way that you put yourself in the position where you're not really going to gain anything if you unstake it and try to sell on the market when you've got very little at this early point in time.
Yeah, that is great points. Very, very well said as well. We got a super chat from Jerry Oaksmith. Thank you for the stream. Thank you, Jerry, for the super chat. I really appreciate it. And could we? I guess I wanted to reaffirm what you were saying, that it really gives you, Hex really gives you the ability to get to the top 1%. Through benefiting from price appreciation that otherwise you would not have gotten. You would not have had that opportunity. People look at the chart and it seems so easy to have held, but they don't understand.
No. That's the hardest part. It's not hard to not sell when the price is going down. It's easy to sell when the price is going down, or it's easy not to sell when the price is going down because you're not getting anything anyway.
Yeah.
It's like somebody walking into your house and going, "Oh, that's a nice TV. I'll give you $1 for it." Right? You're like, "Screw you. I'll keep it. I like it. Thank you very much. I'm not selling it to you for $1." The hard part is holding when the price pumps.
Correct.
And this is very important. The hard part is when the price pumps.
Yeah.
Because if I was not staked, buying sub-cent, you don't think I would have dumped a whole shitload at 10 cents?
Oh yeah. Oh yeah.
Would I wouldn't. I probably wouldn't even seen 50 cents. It was unachievable,
Yeah.
And this is the way our minds work. So new levels become normalized, right? everybody is pretty normal at thinking Hex is going to hang out here around 3 cents. That price is normalized. That was not normal. A penny was like this moonshot back in the day where everybody was like, oh, it never hit a penny. Market cap's too high. It never hit a penny. It's not possible. It's impossible. Nothing can, because at that point in time, people believed market cap was an actual valid metric. And when you're talking about coins that are just send and receive functions, that may have been true. It may have been something to somewhat base it on because you've only got the two factors to look at. And they're basically comparing all these things that are similar that basically have a sell price and a supply. And they just took those two parameters and multiply them. And then there's your market cap. But Hex has so much more depth to it that literally we have all our own websites to discuss it. Hex Fire will break up all these different little charts of all these different little, things, nuances to look at because Hex actually has metrics. It's not just a send and receive coin.
Yeah. Yeah, very, very well said. It's and that's why I tell people, like, a lot of people think that, maybe there are other opportunities, of they would say, even let's say Pulsechain is going to do better than Hex, which is debatable in and of itself, but they'd say, I don't want to buy Hex. I want Pulsechain. I don't want to buy Hex. I want PulseX. But you're not going to benefit from the multiples, that you're not going to benefit from the thousands of X's of Pulsechain compared to Hex, which you would benefit from because of the time locking. You're going to get suckered into selling too early, too late, regardless.
Now there's some systems being made right now to set up like a drip.
So that's Maddie's thing, and I think that definitely improves it, but still, you don't have the
yield
incentivization.
So this is the problem that people don't understand.
But wait, can I just say it's a different yield incentive, like the yield incentivization of Hex. People are more like they're more willing to give up their coins, so to speak. They're more willing to lock it up for a long period of time because of the 38%. As much as I like time pays me, you don't have that incentivization, which I think is very pivotal. It's very, very important.
Yeah, because you're not earning new coins. You're just earning price appreciation. The other thing is people don't take into consideration that Pulse is really kind of the first real deflationary currency, and we don't really know how that's going to play out. In monetary systems, generally you do need inflation to pay new users. That inflation is okay. It's just who gets it that makes a difference, and what they do with it when they get it, right? So if you have a hyperinflationary coin and people just immediately dump it on the market, no, it's not going to do well. Okay. If anybody can do it and there's no restrictions on who or can do it, or there's any rules to the game whatsoever, you have infinite down forever. You can't do like a socialistic distribution because it just doesn't work. Okay. We've got proof of that. I'm not going to get into it. We've got proof of that. And you were warned about it, but you still want to fight me on it, but that's fine. Do your thing. But the reality will show you the truth.
Yes.
Whether you like what's being said or not, reality will show you the truth. And Hex, Pulse, and PulseX are different animals. They will do different things. The other thing people need to understand is we helped perpetuate this thing. And this is part of our problem, is we've helped perpetuate this thing because Hex was new, and we wanted to stress the potential of Hex being new and having the ability to have more gains than something like Bitcoin that has limp gains now because it's a heavy object. Okay. And because we helped perpetuate this, new people coming in think that the new shiny object is going to outperform the old object automatically just because it's new. No other reason whatsoever. Just because it's new, it has more potential. Does it have more potential for the upside? Yes. But can it achieve that potential? That's questionable, because people need to understand only very few coins have ever had the ability to do a 10,000x. Most of them go up, they die, and they don't come back, or they come back 3 years later, right? So you have to understand how rare something like Hex is to begin with. And it's like digging through a rock pile and finding a diamond and going, oh, well, let me just chuck that diamond out. Let me keep digging. I mean, that's really what's going on. The other thing is, okay, fine, but Hex and Pulse are not the same thing. Why is Pulse even being built?
For Hex.
To lower gas fees, right? It's gas. That's what it is. It's gas. It's a network for Hex to run on. And we can get into how liquidity routing sets up and how it's possible that literally I don't want to get into all that because it just melts people's
Okay,
brains.
so let me say yeah, that was something you touched on. I did want to talk about that. So everyone thinks that, oh yeah, I don't want to get into Hex. I want to get into this new project that's building on Pulsechain because it's new and Hex already did the 10,000x. So what I say is, so this is what's called the novelty metric. I coined it. It's called the novelty metric, meaning the coins that are new generally do better. That is not true. That is not true. The way it works is if you have a cryptocurrency that makes it, meaning one of the like 10 so far
one of the three that actually makes it.
No,
Yes.
and my metric for making it is a higher high in the next bull market. So I could count on my fingers. It's Bitcoin, Ethereum, Cardano, Doge, Monero, BNB. That's it. Is that it? Are there any more?
SHIB.
Oh no, SHIB was one. SHIB was one cycle, right? SHIB 2?
Yeah, it's in one cycle, yeah.
Yeah, so if you're one of those coins, your first cycle in comparison to your second or your third, your earlier one is going to do better than your later one. But if you're comparing one coin to the other and it's a new coin, it's probably not going to make it. And even if it does well, it's probably not going to do as well as those coins did in their second cycles. Like if you compare like any given new coin, like if you compare any given new coin to Ethereum in its second cycle, it's not even close. Like everything bleeds against Ethereum. That's what Ben Cowan said.
And here's the thing. You can't know what's going to work on the market. You can't know. You cannot know what people are going to react to, what they're going to adopt and what they're not. It does not necessarily have to do with the product at all. People buy billions of dollars worth of dumb shit that you would never, ever, ever think about buying, and it still happens, right? That's because you are not the market. The market is the market. You have your perception of what you believe the market should do or how people should behave, but you're basically projecting that on everyone else. It's just like there are people that bought NFTs thinking that $1 million NFT is a deal. You're not going to change their mind because in their head, they believe it is because it's valuable to them. And since they were willing to pay that much for it, obviously there was a market for it. If you sold it, then you'd be doing all right because you sold them something that only they value. Only they value. So when they try to go to sell it on the market, thinking, well, I bought it for $1 million, I should be able to sell it for 10. What 10 million? Who's got $10 million is really going to be interested in buying that thing that you are so personally attached to? So not everything is, people relate to themselves. They're like, oh, well, I like it, so everybody else is going to like it too. That's just not how it works. Or I hate it, so no one's ever going to buy it. Forget it. That's not how it works. You are not the market. You are not reaching each and every one of these individual people that are on the market trying to tell them how they should spend their money. They're going to spend their money how they choose.
Okay, so
billions of items.
So that's actually an interesting thing you're saying, but I actually did. This is the furufinance metrics. I did think in my head, there are metrics for determining success of a cryptocurrency over a long period of time. And this is not a given. Nothing's a given. There's always curveballs. There's always new things that could affect markets and affect the metrics. But I look at the coins that made it. So what does it really require? It requires a community. Community is number one because that's really consensus of value. It requires game theory. I think game theory is big. Founder benevolency, just not being a scam and the founder not rugging. I think that's one of them. I guess, were there any other ones? But I'm saying it's those. But the reason why it's so unpredictable,
Centralized control.
Centralized control.
A large majority of the coins being in the hands of someone who does not need to sell.
Yes.
Centralized control is necessary for any of these coins to actually work. The idea that these coins are decentralized is false. You're looking for a unicorn. It's not true. You were talking about BNB on your last show. You know why BNB is successful?
They
Because
buy up the token,
95% of the coins are owned.
and they use the trading fees to
And they
pump
use
it.
their trading fees to buy it back. And they have such a small amount of coins in circulation that they can pretty much pump that price to wherever they want to pump it. And what they do, this is what they do. It's the same thing FTX did. They pump the price of their own coin so they can show that their coin has value and that they hold a lot of those coins. And then they are able to borrow against those coins as if they had that true value, when in all actuality, they don't. And that's where they get in trouble, is because they use that collateral money against a token that nobody really wants to pay $300 for. And they're able to get multitudes of money loaned against that. That's how that works.
Yeah.
And this has been going on for a while. This has been going on for quite a while. And that is actually what BitConnect did, was they bought their own coin through their own oracle, holding a large amount of supply, increasing the value of the coin, making the coin go up, making it look like it is valuable so people would put real money into it. And then that covers their costs. And then they're able to turn around and pump the coin even more. When you have a large centralized, and you can do this very simple, okay? You can go to etherscan.io, pull up any ERC20 token that's successful, and look at the top 100 holders. We did this on Hexo's show, and you will be surprised that any successful ERC20 token is upwards of 90 to 98% centralized owned. Same thing with crypto.com. They're like 95 to 98% owned by crypto.com. So this idea of a decentralized coin pumping or being able to hand it out to whoever, whatever, that doesn't work. And people have this idea that this decentralization is no, it actually needs to be in the hands of somebody that doesn't need to sell it, that can use it for collateral to gain other things to support their coin. That's what happens. That's the truth. Nobody wants to admit it, but that is the truth.
Yes, 100%. I'm actually trying to find that that tweet to share with everyone. But what you're saying is 100% true. And what I like about Hex is that the centralized ownership is not in the hands of a company, because companies are there's just so many variables that could lead to a screw up and a cascade that they will inevitably.
They're a company and they're trying to make a profit.
Exactly.
They're not a founder that's trying to make a point.
Exactly. So the company could really, if they have to pay off a debt or if they have expenses, they're going to have to start selling and things like that. And yeah, you could say that, oh yeah, the founder or the founder of a coin without a company could also, have these personal things that he needs to sell. But what's more likely? Who's more likely? Who has more expenses, a company or a single person? You know what I'm saying? It's like
Richard doesn't need to borrow against Hex.
Exactly.
And now here's something new. All right. X times Y equals K. That is very important for you to understand. That is new. Before, centralized exchanges had to borrow against their fundage. Why? Because there was no other way for them to do it. So they pumped their own coin to borrow more money to, do the thing, right? Mm-hmm. Well, if you were a founder and you created a coin and you set it in liquidity pools, you could create a pairing of USDC and your coin and literally collect fees. Nothing else. Just collect fees. You can then take that USDC, and that's your money. You take those fees out, leave everything as it is, and then when that eventually distributes, right, and it runs out of Hex, or runs out of that coin, you just set another level. And you are literally printing free USDC because you created a coin. And that's why a lot of people are making their own coins now, is because they figured this out. That literally you can collect fees on your own coin. because you can be the primary liquidity provider and collect fees on your own coin. And there's nothing illegal about it. There's nothing wrong with it. It's a fair way of distribution, and you never need to sell on market your coins ever, because literally owning those coins allows you to produce free USDC.
True, and that's true. And yeah, that is a great point, and that's a very insightful point, and that is something that I actually did not know until now. But what I was coming from was just the needs and expenses of a single person compared to a company.
Mm-hmm.
It's not even close. I mean, you're just, how many orders of magnitude are you increasing your risk now, putting your faith in a company? That's why people think that, oh, a crypto that has a company is good. You know, the company metric. That is a false metric, because the company actually adds liability. And all these companies, and like companies that could do well for their holders, have earnings, right? So like you look at like Apple, they have earnings. So you want to, the people that get in on growth stocks, the reason why they're risky is because they have no earnings. So in order to extract liquidity, these companies are going to sell on their shareholders, and most of them don't make it. And crypto probably that much more so, because it's an unregulated environment. So the company thing is it's a bug, not a feature, right?
Well, it's yeah, it is. And what I said earlier is very important. The centralized ownership needs to be in hands of somebody that doesn't need to sell it.
Exactly.
Now, if all the Hex was distributed on the open market right now, OA just nuked himself, right?
Yeah.
Guess what? Then everybody stakes it because they want to earn the new yield. Guess what? Your staking percentage goes way the hell down. Mm-hmm. It has to be responsibly distributed. And the most responsible way of distribution would be to provide liquidity. Okay? Even the pairings between when the nukes, there's all kinds of cool shit that's going to happen with Pulsechain as a result of this, but I don't really want to get into the depth of that right now, because
we're too stupid.
It's too much, man.
It's too much,
and it's just going to fry people's brain. Oh. So the thing is, you have to give people information they understand. If you're unable to do it in a way that they can understand, it just generates fear. Okay? Because your brain likes to fill in the blanks for things that it doesn't have answers to. And then when you get all panicky and upset and you don't understand what's going on, you start filling in the blanks, you start thinking imaginary horribles, and it gets you all worked up, and you still don't know what's going on, right? So people attack what they fear and fear what they don't understand, and panic is the best way to get yourself wrecked in crypto. Chill. Relax. Be in a position you don't need to sell. Just like Richard's in a position he doesn't need to sell. Okay. And people are like, oh yeah, but look, I'm gonna be straight with you. Richard could spend $1 million a week for the next 40 years just with the Pulsechain sacrifice. Sure. Okay. He does not need to sell a single hex ever. And selling that hex anyway would be stupid, because being able to provide liquidity and remove those coins off the market, increasing the value of those coins, is more beneficial to him than anybody.
Yeah.
Be real.
Yeah.
I mean, that is what you call value creation, when you hold a majority of the supply. Like, so you don't know how many diamonds are actually in the ground, right? You don't know how much gold is actually in the ground. You don't know how many diamonds are in space that could crash on Earth, or gold that could crash on Earth. You don't know. Those are unpredicted measurables. But see, with blockchain, people are looking at like all the coins, right? And saying, well, this is all the coins. We know that to be fact because it's code and it's locked and this many coins exist. But there are plenty of other things that people buy that they don't know. And it doesn't matter what the market cap of them is or how much is available. This is the collector theory that they've got drilled in your head. Well, it's a limited supply. Act now before they're all gone. This is a limit. This is a limited supply thing that they're trying to put in your mind that creates value. In all actuality, what creates value is the flow, right? The ability to trade it for something else that you want creates value. It doesn't matter really as much as you think about supply. And people are too busy focusing on, well, there's a total supply of hex that's this big. Well, there's a total supply of diamonds and gold that is way bigger than you can imagine, but you just don't know about it. Because you know about it, you're going to speculate on that. It doesn't matter how many exist. What matters is how many are available.
Correct. Yes.
At one
Key
given
point.
time.
Key point.
So just like De Beers, right? It's not the diamonds in the mine. It's the diamonds that are available in the case. And they can set whatever price they want. Why? Because they own a majority of them. So you're not getting any unless they decide that you're going to pay a higher price. And that's where the centralized ownership thing comes into place, because they're not going to let you have it for cheap.
Yeah.
Right now, we've been through this phase where everybody's real comfortable with Hex being cheap. Real comfortable. In fact, they think it's going to go cheaper. So comfortable. They don't understand that, boom, it's gone. When this period is over, boom, it's gone. You don't get that opportunity ever again. You think you're going to go back and buy Bitcoin for $10? When's that going to happen? Ain't going to happen.
Yeah.
At a period of time, boom, it's over. It happened at a penny. It happened at a penny. It happened at half a penny. It's gone. It's not going back there. It's dreaming, right? And what's really funny about that, even if it wicks, one dude gets to buy the bottom. One dude out of all the Hex holders actually gets to buy the bottom, and only the last coin. Only the last coin at the bottom. Everything above that, you're just dreaming about, wishing you had gotten in at that number. And the worst thing is you end up with not having a ticket and not getting a ride on the bus when the bus takes off because you're too busy waiting for that cheaper ticket. Personally, I'd rather pay a little more, make sure I got my bus ticket, make sure I got a premium seat, and I'm going to ride it on out. I'm not going to get caught without a ticket.
Yeah, and I really like that you said that, because this is something that I've been saying, and seeing that you say it, that gives me some validation that maybe I'm onto something. But if you believe that Hex is going to go up over time, that it is one of those cryptos that are going to make it, and I'm assuming most people are, because they're saying, I want to buy it just at 2 cents, at 1 cent, at half a cent, whatever. I'm saying, like, you're picking up pennies in front of freight trains, because if you miss that, which, I mean, people that try timing the market generally don't have good track records. Just look at all the people, look at all the TA people on YouTube. Then you're going to have to buy considerably higher prices, and considerably higher prices means considerably less potential return on investment in the future. So if you want to buy it at 1 cent and you buy it, like you said, at 5 cents, then that's 80% less, So when you're at all-time highs, you could have had that times 5, which is why the case for DCA, you just got a DCA. Mm-hmm. Yeah.
All right. Here we go, guys. You got $300. Okay. 300 black, three black chips here, $300. Okay. You buy Hex today. Oh shit. It goes down to 2 cents. You're down $100 temporarily, right? It comes back to 3 cents, right? You got it. Okay. Let's say it drops down to a penny. Oh, you're temporarily down $200, right? Right now, $300 gets you 10,000 Hex. Every time it goes up a penny at 10,000 Hex, you get another $100 chip. Now, are you going to sit here and wait until you can get that $100, get it at the $100 price, or do you want to make sure that you're on the bus so that every time it goes up a penny, you get another chip? And it's really just that simple.
Yeah.
And if it does go down to a penny, it ain't staying there. If it goes down to 2 cents, it ain't staying there. So dragging your feet, waiting for that better deal, the store's going to be sold out. The store's going to be empty. You waited last minute to go shopping, and the store's going to be empty, and then you're going to be sitting there, whatever.
Yeah.
Would you rather go to a store and pay a little bit more and make sure that you have it, or would you rather risk not being able to have it at all? It just doesn't make any sense. It's asymmetrical risk.
And in the time that you're waiting, had you been stake, you would have been earning more. So you have to you have to factor in the time value of money as well. So That's another thing. And if you miss the Pulsechain launch, then you're not getting the double. So I'm saying if you're waiting for lower prices and boom, system state fork, like you got to pick a chain.
Well, yeah, and you do got to pick a chain. So like right now, people are like, well, okay, well, there's a lot of stuff going on, dude. And the logic just doesn't make sense to me, and it's frustrating. So it's like there's people that are like, okay, well, I'm going to save my money, and I missed the Pulse sacrifice. I'm going to buy Pulse day one. Okay. What do you think is going to have value over there day one?
Hex.
Okay. And you get that Hex for free, right? Are you going to get it cheaper than free? How do you get it for free? Well, you have Hex to begin with. So the Hex you get is free. Is it going to get any cheaper than free? Or they're going to buy cheap Hex over on Pulsechain day one. Can you get it any cheaper than free? Because you get it free when you have Hex to begin with. That doesn't make sense. The other thing is, okay, so you want to buy Pulse. Well, how do you get Pulse over there? Now, you were talking about the dollar, the US dollar thing. I think that the ratios are that a Hex is going to be worth a lot of Pulse on day one.
Hex is going to be worth a lot of Pulse compared to the dollar.
Yeah.
Oh, so that was my thing that I talked about. Yeah, I would want you to speak about that because you understand liquidity pools a lot better than I do, and most people do. So I said the one risk people want to hold liquid Hex for buying Pulse on day one if they miss a sacrifice. The concern that I had was that you're subject to the risk of the volatility of the market. So, for example, you were let's say you thought Pulsechain was actually coming out in May, which was when Richard said it would come out, and everyone thought it would come out, and Hex was at 12 cents, and you're holding your liquid Hex. And then it doesn't come out. And like right now, Hex is, it's dropped 80% since then. So I see it as like less buying power. No, so I think like maybe have a percentage in stables just to keep your purchasing power. What do you think? But let me just say, I still DCA into Hex with what I'm staking. It's just the money that I put aside to buy Pulsechain.
Your Hex that you get on Pulsechain are absolutely free.
Yeah.
For having Hex. You can't get cheaper than free. So your USD value is going to lose its peg fairly quickly. And it's hard, man. It's hard to say because I mean there's calculations based on how I think the liquidity pools are going to be set up, which may or may not be set up that way. And I don't want to tell people. I know what I think is optimal, but I'm not in control of that. So if it's not set up the way that I think that it's set up, I don't want to steer people the wrong direction. What I think the optimal play is I think everything that's being built is being built for Hex. If you even think back to why Pulsechain was going to be invented to begin with, is the fact that it was supposed to save us on gas fees. That was its purpose. Since then, it became the new shiny object that people have money on the side right now. Literally, people have dumped their Hex bags and they are setting in USDC because they're ready to go buy Pulse day one. And also, there are people that are ready to dump their Pulse day one because they're expecting some kind of quick lottery ticket win. And any of these cryptos, whether it's Pulse, PulseX, they're going to need at least 2 years for maturity to even catch up to where Hex is. That's the reality. It's not going to be a quick. It's not a lottery ticket. This is an invest over time. There's a lot of hype behind it, but I'm not so sure with the amount of coins that are on the market, the eagerness of people to get out because they're tired of waiting. Some people are highly over leveraged and with the way that the routing is set up, that it's even possible for Pulse and PulseX to outperform Hex, because if they go up in value based on their ratioing, they would push Hex along at a higher multiple. So like if you go on to apphex.win right now and you look at how many Hex or how many Pulse and Hex is worth. Well, if it starts out day one that one Hex is worth 200 Pulse and Pulse goes up in value, if that liquidity is strongly bonded, you know, Hex can do multiples of what the other ones do based on Hart's law. It will drive Hex price up.
Could you say vice versa also, that Hex will drive Pulse and PulseX?
Yeah, so it depends on the routing. It depends on the routing. And it depends on the routing, and it depends on the ratios. And we don't know what those are yet. So people like to think about, well, the properties mean that this is going to do this, and this routing and ratios are everything.
Yeah.
If the liquidity pools are large and nobody has enough coins to move them, this can make a significant effect on that. And I think that Richard fancies Hex above all else.
Yeah.
And the reason we're getting what we're getting is because he wants Hex to succeed. Look, if the OA wanted to, Hex could be the universal conduit between chains, which means one Hex would always be one Hex. And this is very easy, and it costs the OA nothing. Costs the OA absolutely nothing. It's just providing liquidity with coins he already has. He sets up 10 billion and 10 billion Hex to P Hex, or E Hex, right? Nobody has enough coins to change that ratio from 2 to 1. Now, people are like, well, but that affects price. No, it doesn't, because we're not talking about USD value. We're talking about making a bridge between a coin on one chain and a coin on the other, allowing one Hex to always equal one Hex, which would allow you to not sell your Hex on Ethereum, but just move your Hex over to Pulse with never selling it. In fact, selling it would be stupid at that point, because you could trade it for the more valuable Hex on the other chain, whichever way that is, right? And what would that result in? That results in parity. Why? Because you're able to trade a silver coin for a gold coin. And as long as you're able to do that back and forth, and nobody can change that ratio from 1 to 1, that creates parity, because you'd be able to go on the cheaper chain to buy it cheaper and then trade it for the more expensive one.
Yeah, but here's the thing.
Forces parity.
So question. So people might not want to arbitrage if the gas fees on Ethereum are very, very high. So could that cause a gap, so to speak?
But you could move out of that without selling the coin. That's what I'm saying. To have that universal conduit between chains where one Hex is one Hex, no matter which chain. And now that didn't happen. That did not happen with the other forks. And people expect, well, that's not going to happen because it didn't happen with the other forks. Well, but those are not complete. Those were not built with exchange value. Those did not have on-chain exchanges, except for, Kyber Swap that sometimes works. So these were not expected. Richard made a few statements. One, I don't want to see cheap Hex on any chain.
Yeah.
Okay. How would you do that? Well, if you set up a 1-to-1 ratio, that forces parity. Two, that the liquidity pools are going to be extremely large on PulseX. It's going to be the most liquid of all exchanges. Now, why would you do that? Because Hex only works if Hex is the premium store value. And if liquidity chasers are making more liquidity, providing liquidity, then why would they want to stake their Hex? Well, how would you prevent that? Well, you would prevent that very simply by making the large pools large, so that anybody else adding to those pools gets diluted, and they're not making as much as they would have if they would have staked their Hex. Creating a parity or creating that conduit of 1-to-1 Hex, what else does that do? That allows the OA to remove Hex from both chains. Every time there is a transfer from one Hex to another Hex, that allows the OA to remove those Hex permanently from the market from both chains. He doesn't, and what else does that do? That preserves the Ethereum side, because you can always trade 1-to-1. So that keeps the Ethereum side or the Pulse side from crashing, because there's a balance between the two sides.
Yeah.
Because you have that universal conduit. God, I'm trying to think of what the other quotes were.
Well, could I just throw in another thing I was thinking is that even if it's not exactly 1-to-1 parity, the gap can't open that much, because if the T share, if you get I'm saying like if people, start going to Pulsechain because of cheaper gas fees, whatever, and the T share rate runs up and you could earn that much more yield on Ethereum, that it outweighs the expense of unstaking with an expensive gas fees, people are going to go to the other side and it's going to close the gap at least to an extent.
Yeah, but you've got, like I said, you've got other incomplete chains that are not very good examples. And if you look at them, you have to almost look at them like they're testnet. They're almost like testnet because they don't really have real world value.
Yeah.
It would be the same as dumping money into a testnet, and people
Yeah.
aren't doing that. And that's why those prices are much lower.
Yeah.
And it doesn't hurt anything, right? We've got coins over there. It doesn't hurt anything, but I wouldn't be dumping money in over there.
Yeah, and also you're not getting copied onto Pulsechain if you buy.
And
Hex
you're not getting your copy.
Yeah.
Your copies are going to come from what we're currently using, not those forks.
Yeah, and also like it's just not a good chain. Like I don't see a future in proof of work. So I don't know why people would want to put their money in there. But I guess we got 68 watching. Please hit the like and subscribe button if you haven't yet. And please follow at C, if you're not, which you probably are, at it's CCFX Studios on Twitter. That's Johnny's, and mine while you're at it at furufinance. So I guess I just want to move on to Pulsechain, PulseX. How do you see how I think the game theory matters in price appreciation? Although you did talk about like other things, other variables, but I guess
routing and pools are everything.
Routing and pools. Okay, so I guess if it matters at all, inflation to protect the price or deflation to protect the price. How do you see Hex price performance comparing to Pulsechain and PulseX price performance over given periods?
I think Hex wins. I think Hex wins because I think it's going to be amplified based on the success of the other two coins.
Okay.
I think Hex has already got the 2 years, 3 years behind it. I do think that there's going to be a lot of sell-offs and a lot of craziness going on. There will be a lot of volume. I like the idea of the buy and burn for PulseX. And what's really neat is if Hex is ratioed to PulseX, Hex gets the benefit of its buy and burn features, right? So this is why I said ratios are very important. So if one Hex is worth 200 PulseX and PulseX moves a penny, and that liquidity is big and you can't change that ratio, that means Hex gets a 200 multiple of that 1 penny move. It gets a $2 multiple. So that's nuts. And it doesn't seem right and real, but because all these coins are new and because the candy shop is being set up, it very well can be set up that way to where all these other things will amplify Hex. It's all a matter of how the ratios and routing is set up.
So, so that's interesting. I was thinking, I do agree. I think Hex is outperforming Pulsechain and PulseX over 5, 10, 15 years because people don't.
But it has to do with the ratio. If you could trade one Hex for even 10 coins, right? If one Hex is worth 10 Pulse, right? And Pulse goes up a penny, Hex goes up 10 cents. That's just ratios, man. It's not anything amazing about it. It's just if the pools are so big that ratio is locked at certain levels, it's Hart's law. Everything is going to move as a result of that ratio to that other thing.
Yeah, but I'm still not. Maybe I'm missing something. But it can't go back. It can't go back and forth with Pulse and PulseX too, like going up and then. I mean, a Hex going up.
It's all a matter of the ratios. It's all ratios.
Oh,
that's what's funny about it. It's not what you think. So people are thinking that's all narrative, right?
But doesn't it matter if people want to buy
what you can trade what for?
Yeah.
It all comes down to, is this thing worth 10 of these? Is this thing worth 100 of these?
Yeah.
That's what it comes down to. So where those starting ratios are, if those pools are so large that nobody has enough coins to ship it. Now look, a lot of people are going to dump a lot of coins for different things, but it's all about how those ratios are initially set up. It's going to determine it. And nobody knows how those ratios are going to be set up. But I think people are too busy focusing on the fundamentals or the idealisms or the narratives, and they're not understanding that it's just math.
But
It comes down to, is this thing worth how many of these things?
But doesn't, like I'm saying, like supply and demand, affect the ratios? Like when someone if there's a big buy in Hex or whatever I'm saying, or Pulsechain, PulseX, that drives the price up, kind of thing.
Yes, but because a Hex is worth X amount of these things, if you buy the Pulse and it's worth X amount of these things, it's Unisocks all over again. That was the other thing that I was trying to think of.
Oh, Unisocks.
So is the pair of socks worth $40,000? No. Why is the pair of socks turned into $40,000? Because it was set at a ratio of to something else that went up in value. So when that thing went up in value, because Unisocks was worth X amount of those things, guess what? Now you got a $40,000 pair of socks. Whether it deserves to be a $40,000 pair of socks or not, it's all based on the ratio. The ratio is what makes this happen.
Okay.
So if you can trade, if it costs, when Ethereum was $100, and if Unisocks was worth, 3 Ethereum or something, right? Well, when Ethereum went up to $4,000, now you got $12,000 socks. You see what I mean?
Yeah.
Because Unisocks was worth 3 Ethereum or whatever. I'm not sure what the numbers were, but I'm just saying that's how these things occur. It's totally based on ratio. It's not what you think. It's just math.
Because priced against the dollar, the value goes up because okay.
And people think that, well, that can't happen. You would never have large liquidity pools because it wouldn't go up in USDC. But if you have USDC pool only paired to one thing, like Pulse, okay?
Yeah.
Because Pulse goes up in USD value, and these other things can be traded for a Pulse, and those are multiples of what the Pulse is worth. Now everything goes up in multiples of USD value because they can be traded for X amount of Pulse. That's how that works. So you only make one pool, and that prevents you from splitting this money amongst everything else. And yes, I understand that the automated market bot is going to set up most of the pools, but the only ones that are important are Hex pool, the PulseX pool, and the Pulse pool. And those will be set up. And how those are set up are going to determine how it performs.
And you think that it's going to
everybody's opinion on what like
that. And you think that it's going to be set up to best benefit Hex?
I think it's always been to benefit Hex.
Oh, yeah,
we wouldn't even be having a Pulse chain if it weren't for the fact that it was to save us gas fees.
Yeah,
fair. And I bet Richard right now wishes he had never done it because it's taken so damn long and it's annoying the shit out of him, and he wishes he never put himself up to it. He's not going to fail.
Fair enough. Okay, so I guess that moves us on to the next question. So I have this comparison of the Pulse chain, these projects building on Pulse chain. I have this comparison to the .com bubble, in the same way that during the .com era, which you lived through, so I'm sure you remember it very well. But
thanks, man. Let's point that out.
yeah. But basically, you had all these ICOs and these companies that they added the .com because that was the hot thing. That was the hot cake. It was the hot ecosystem. They put a .com on the ticker, and all of a sudden, their stock skyrocketed. Their stock skyrocketed. Their equity skyrocketed.
You mean like they're doing with Pulse?
So every single new project building on Pulse, or not even building on Pulse, but they're an ERC20, and since they'll get copied over, they put Pulse on it, and they throw a sacrifice, and they're able to raise hundreds of thousands, if not millions of dollars, basically because they put the Pulse on it. So what's your thought of the comparison? The only difference I say also is that, okay, just what's your thought on the comparison? Yeah,
sounds like a smart way to make a quick buck.
Oh yeah.
Does it mean that it's going to develop or do anything later? Probably not. But it's a smart way to make a quick buck. That's what I think. So that goes back into, again, people don't understand the rarity of anything in crypto actually doing what it's supposed to do. And for the most part, it doesn't have to, because people will buy anything. It doesn't have to, you know. Uh, it's not your opinion. It's the market's opinion. If the market buys it, the price will go up. It doesn't matter whether or not you like that coin or not, you know. So uh, I could look at something and say it's absolutely useless to me, but that doesn't mean that other people aren't going to buy it, you know. And I think what you're saying is very true. Yeah, people are utilizing the Pulse branding in order to market a thing. That's typical.
Yeah, and I think the difference though is that first of all, the .com bubble was regulated. I mean,
Mm-hmm.
you had to register with SEC for an ICO,
Mm-hmm.
right? You couldn't be anonymous. You couldn't hide behind a pseudonym and not showing your face. You had to suffer legal repercussions. So it's like just that much more risky. And also, you don't benefit from all the money raised from the sacrifice. At least in the
Right.
.com bubble, if you got in on that hot thing early and you sold it, like you made money. Here, you're not. It's good. It's very good for these founders who may or may not be scammers or may not have good intentions. They're able to raise a lot of money, but I don't think it's good to the sacrificers, investors, whatever you call it. And also, people don't consider the impermanent loss, because with your money, which is scarce, I'm saying people like to say, "Oh yeah, Hex is going to do well anyway because money is abundant." It's like, yeah, money's abundant, but not my money. My money could either go to Hex, Pulsechain, or I could wait till Pulsechain launches and buy Pulsechain or PulseX, or I could go into your Pulse fill in the blank thing. And if your thing doesn't do well, that's impermanent loss. So what's your thoughts on that?
So here's the problem that we did have. Because Pulse took so long, we did have all these other sacrifices geared and everything. And first of all, people became accustomed to things, right? Uh, just just like people come from the fiat world and they come into crypto and they immediately look for a middleman to give their money to, right? That's what they do, because that's what they're used to. Oh,
Oh,
I've got to give my money to
me.
somebody else so they can make more money for me. That's what I got to do.
Yeah.
And the same thing with the sacrifice thing was. In all actuality, that should have scared most investors off. When Richard said, we're doing a sack phase, you are no expectations. This is just sacrifice. It's for freedom of speech. You ain't getting nothing. That was meant to scare people off. It didn't, because people had already seen what he had done and he had already had a track record. So people threw mad money at it, right? Now, the next phase of sacrifices and stuff came along. Well, these are people that were basically copying that same sort of launch phase, but not necessarily having the accreditation, or the support that they should have. But because people were used to the first sacrifice, they're like, it's just another sacrifice. Let me throw money at this too. And it worked, because they
Yep.
got lots of money. Now, what they're going to do with it and what they're going to develop and whatever. But here's the point. This hurt Hex price, because you had people that were a small group that had limited amount of resources. Now they're throwing their money in all these multiple different directions. Okay. Even the things that removed coins from the market and reduced the supply and put things away in the future, they now became competitive products. Why? Because it was another option to split your money, your limited resources, and split your money in those multiple directions. So more and more things have come along that Hexicans have split their money in those multiple directions. Whether or not that was the intent or not, whether or not, whatever. But we're at the price level we are, not because the market's crashing. No, no, no. We are at the place where we are right now because, one, people are not buying anything. Two, when they are buying something, they have all of these different directions to split their funds. So that limited amount of resources has very little impact on the price, because now it's being spread out in multiple directions. Now, the thing with the derivatives is very interesting. If you buy Hex, all the derivatives go up. But if you buy the derivative, only the derivative goes up. So where really should you be putting your money? Should you be putting it in all these other derivatives? Or should you be putting it into Hex so that the derivatives that you do hold go up in value? It's kind of interesting when you think about it, isn't it?
Yeah. So my take on the derivatives really is I don't like it that in the sense that it strays from the ethos of Hex of delaying gratification and promising not to sell.
It does.
And I mean, but as far as but I think eventually, if the price of the derivatives pumps to where it's at such a premium, I mean, it's going to get sold off and arbitrage. So I think ultimately it really sort of balances out. But at the same time, it people that think, oh yeah, I'm just going to buy the derivatives, you're not going to make, especially if you're not wealthy, you're not going to make that life changing wealth. I mean, the numbers,
No, all that
odds are you're not going to make it.
All that economic energy could have never left Hex. The same with the sacrifices. That was money that has left Hex. That is money that will be sold on the market.
Yeah, but
you have given Hex away to people that are going to sell it onto the market to do their funding.
Yeah, but like, so you could say in the beginning the derivatives were bought up. Otherwise people wouldn't have bought Hex to mint Maxi or or something, or like make an HSI.
I don't believe that people bought Hex to mint Maxi. I don't believe that. I believe people use their liquid to mint it, and the chain analysis will show a lot of people took their Hex and did that. And I mean that is becoming part of somebody else's pool, so that is. So initially it works out great because it does remove Hex from the market.
Mm-hmm.
Okay. But the downside is now that's a second option to purchase.
Yeah.
And now not only do we have that second option, we have 5 more other options to purchase. So if you take a $5 bill, now that's $1 in each, So instead of $5 going into the one thing that boosts everything.
Yeah, but if the premium goes up so high, don't you think people would dump it and then go back into Hex? So I think ultimately it sort of balances out. Is that fair?
Yeah, it will, but I mean, at the moment, at the moment, it's we're at a bad point where there's too many options and very little money, and when people are being very frugal about what they spend their money on, and that's the macro market is when nobody's buying nothing. No prices go up.
And I think a thing is people don't like buying bottoms. People like buying tops. So I think that's another part of it.
We are a couple green candles away from everybody being happy again. And that's it. I mean, like literally, dude, we go up a 9x and like it's going to be like fireworks going off, and then everybody's going to be FOMOing back in.
Yep.
And then that's how it works. That's how these systems work.
That's why I'm more concerned when it comes to like these like new sacrifices for these Pulse fill in the blank projects about like people that otherwise could have bought Pulse or Hex and gotten rich. I think Hex is going to do fine. The question is, are you going to do fine? That's really the question. It's like,
hold the fort for a second. Hold the fort for a second. I'll be back.
Wait, I got a leak too. Okay, I'll hold it for now. Let's take a look at your chats. We got 64 watching. If you're enjoying the show, please hit the like. Please subscribe to the channel. Please sign up to the Furu newsletter. It's free. You just put your email in the link in the description. And put your email in the link in the description for exclusive content that's otherwise not covered in the show. But if you're enjoying, please like and subscribe, and thanks for tuning in. Sweaty, open source code is inevitable, but where people go wrong is trying to trade derivatives in it by way of derivatives in Hex. Okay, gotta love the Hex community. Very true. Hex on ETH-W and ETH Fair. Richard Hart said Hex could hit 100 at some point. You want to address that? I'm going to be back in 25
You got to
seconds.
run now, right? Go ahead. Yeah. That's what I thought he said. He's like, I got a leak too. So can it hit? Yeah, sure it can hit. Why can't it hit? Do you believe in the metric of any? Do you believe in the vanity metric of market cap? I mean, look. When Bitcoin was 8 cents, 30 cents seemed crazy. $1 seemed crazy. $10, man, lock these people up in a loony bin. They're insane. It's never going to hit $10. $100, what a loon. Crazy. How is that even possible? $1,000, what? No way Bitcoin could hit $1,000. I mean, look, if you told the truest believers of Bitcoin that it was going to hit $1 trillion market cap, they would have never believed you back then, right? Because numbers become normalized. Prices become normalized because new people that come in, it's like if you go to a gas station, right, and you're buying a pop for $1, okay? If you walked in that same gas station the next day and it was $5, you'd be like, oh, this is ridiculous. I ain't buying that. But if they raised it 25 cents, every couple months, you wouldn't realize that it happened because that new number becomes normalized. And that's the same with any market. So the person that's coming into that gas station behind you, they don't know that you paid $1 before. They don't care. They want the thing. They're willing to pay what the price is. They're going to buy it. And that new price is normal to them. So that's how these things happen. Years ago, a $10,000 Bitcoin was absolutely unfathomable. And it's twice that right now. It's almost a new car, So does that seem realistic for something that doesn't even, allow you to participate in the ecosystem, that you have to buy specific mining equipment in order to acquire it? And I mean, I guess that's why they say, oh, it's valuable because you have to be this and this and this. But guess what? You're not the one getting the inflation. They are. You are just buying somebody else's something. And Hex, you are actually able to participate in the ecosystem and you get the inflation as an individual. You don't have to buy expensive equipment. You don't have, think about the net negative that you have to start at to be a miner. Millions of dollars of mining equipment starting in the hole, negative $1 million. You start earning Hex, day 2, right? You start earning Hex immediately. The mining equipment, you started in net negative. Why would you want to start it in net negative? Eventually people are going to figure this out. We've got a guy that's a miner that actually was the guy that learned how to use like the blow off that flame or whatever to power Bitcoin mining equipment. And he's really well known for that. He's a Hexagon. And he's one to say, man, this mining shit sucks. Because this is way cooler to be able to participate without having this overhead or this expense, this cost, this burden. You should have him on here. The guy's name's Chris.
Is that okay?
Yeah, talk about mining. And the difference between mining and he advocates for Hex now because there's just no cost.
But Johnny, there's no underlying economic value in T shares like there is with the economic energy of Bitcoin.
But waste doesn't make value. What makes value is people are interested in participation. That's it. That's
fair enough.
And this is something that far more people can participate in with no barrier of entry.
No barrier of entry. That's key right there.
It's like a free rock concert, man. Who doesn't like a free rock concert? You get to participate. You even get to jump up on stage and jump around.
Yeah.
You got to like this. It's not a closed gate where only certain people can participate, or you got to have this much money to get on this ride. Anybody can play.
Yeah.
And that opens it up. See, here's the problem. Like Bitcoin's become this certain exclusivity. It's like a members only jacket. You got to have at least this money to play on this ride. They market it because people want to be part of the yacht club. They want to be part of this exclusive club where you're able to brag about having the ability to overpay for shit. And Richard's outrage marketing, because I know you wanted to get into that too. Richard's outrage marketing is actually focused on the fact that these are people that like to brag about having the ability to overpay for stuff, and that's who he's trying to appeal to.
You're saying Bitcoin miners?
Well, no, just Bitcoiners in general. They like to brag about being able to overpay for stuff, right?
Yeah.
And it's really kind of a mockery in a way if you think about it, because it's like, yeah, what Richard's doing silly, and you guys are silly too, because you're trying to promote something that you're supposed to brag about having the ability to overpay for something, even though it's not necessarily productive. Yeah, you own a thing. Okay, well, I own a lot of stuff. I own a lot more stuff of certain things than other people do too. But is that what I'm proud of? Or am I proud of, what I do? Right. So it's kind of like Snob Club, man. Nobody cares about how many zeros in your bank account you have when you're dead. They care about what kind of impact you've made on this world, you know? And this exclusivity where, oh, well, you're not good enough to hang with us. Well, screw you. We'll go make our own club over here. We're good. We'll let anybody in. We'll
Yeah.
let anybody participate.
Yeah.
Who do you think is going to have more members? Eventually, when you exclude yourself and you try to make this exclusive club, your members die off, and then you don't have anybody in your club anymore.
Yeah.
If you're expanding, if you're accepting, if you're allowing people to participate, then you can grow. And this allows everybody to be right next to the source of the inflation instead of making everybody jump through hoops and trying to justify that, well, you have to buy their shit. This is your own ability to participate, and anybody can do it. And that's what's going to get the virility of Hex, is the fact that anybody can do it. It does have value, whether people want to accept that it does or not. It does have value.
Correct.
Again, a billion things that you may never buy in a billion years and have no use for whatsoever, but it does not mean that they don't have value, and you have to expect that somebody somewhere is buying it, so it has value. There is a market, and you can't deny that there is a market.
Yeah. And I like to say that people have to accept the paradigm we live in where there is so much money, right, being created that it has to go somewhere. And it goes into things that maybe in another paradigm, let's say money is gold or something that it otherwise would not have went to. And given that there's so much money, it's like there's so much money, right? The Federal Reserve, there's an increase in the money supply of 11% per year. I think like total US dollars, but the inflation only goes up 2% because most of it doesn't go into, the things that goods and services like clothing, food, you know, uh,
A lot of it goes
cars.
off in the scratch off tickets. A
It
lot of
goes,
it goes to
yeah,
alcohol. A
it
lot of
goes
it
in,
goes to drugs. A lot
yeah.
of it goes to the fireworks.
Yeah,
Hey,
but
you
that's
know,
but even that is constant what it goes into it. So all that excess money, it goes into stocks, real estate, and crypto. I mean, that's just where it has to go because you're not going to preserve your value in food. You're not going to preserve it in goods and services, obviously, because they just don't keep their value. And being in like cryptocurrency, where the liquidity is thin now, gives you the opportunity to really change your life because when the money hits it, it goes up that much harder. What do you think about that?
well, what's the real fun thing to think about is actually there's more money in crypto today than there has been. You just
Yeah.
don't see it. You don't
Hmm.
see it because what happens is they stable up, right? So if you follow the stable coins,
Yes.
that is actually real market cap. That's the only time you'll hear me talk about real market cap, because those coins are changeable for $1 real. So
Hopefully it
when you
won't.
see a 60 billion market cap for each one of those stable coins, that's real dollars. And what is that dollars doing? They're waiting for the market to turn green so that they can be one click away to drop back in. And that goes up every year.
Yeah.
That amount of stable coins in US dollars goes up every year. So they stable up, market turns green, that money is one click away from jumping back in. And that is how you get left behind, because you don't see that coming, because you're not paying attention to the fact that that money is still in the crypto space. You're just not seeing it.
Yeah. And I think even those people that are waiting on the side get left behind because they probably come in after it goes green, meaning they're buying a huge pump. But that's a good question for you is the 4-year cycle. You've been in crypto for a while. And everyone talks about the Bitcoin halving, and then that really leads to a year later the blow off top. It was it wasn't a no-brainer, but I guess at this point where there were 2 cycles, now it seems like it was validated. But now there's another variable of the Fed policy, to fight inflation, which is driving the broader markets and then crypto down. So I guess the question is the 4-year cycle still intact?
I think so. I think it's 3 up, 1 down. I don't
3 up,
think
1
it's
down.
changed. And we're in the 1 down right now, and it sucks, and people are upset, but but you get 3 up. So, when this is over, that's where it becomes difficult. When is a good place to take profits? That's the hard thing. That is actually the hard thing, because you can sell at 10 cents and it goes up to $1. You can sell at $1, it could go up to $10, and you'd be like, and then what happens? You got these people that are in and out, 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 all the way back up that ladder, and they make the next top because they're unsure of their position. So they grind it. If you make a decision, and what's nice about Hex is, look, you never have to sell all your coins. And if you are in a large position in Hex, you could, in fact, set a liquidity position, okay, with USDC and Hex. And then when your Hex is all gone, you just remove your USDC. That's it. You don't actually have to sell it. And if the price grinds up and down, up and down, up and down, up and down, instead of whining all this time, you would have been making money, because it's been grinding in this range for like a year. How much money do you think you'd make with all that volume grinding for a year if you would have just set your Hex there and left it?
Yeah.
Right.
Or if you staked it.
But actually you would have done a lot better with. That's what I'm saying with the liquidity. You can do better if you are in a large position grinding it out like that, because you're able to take that USD and sell it without hurting the price of Hex whatsoever, because you get to collect fees on both sides. But it's not for everybody.
Yeah.
Right? It's for people with large positions. It's not for everybody. And people that are making the wrong pairings end up with impermanent loss, and there's a lot to it. There's a lot to understand. So I don't like to tell new people to do that sort of thing, because they end up making a mistake.
Yeah.
Or they put in small amounts and it costs them more to remove that small amount than the money that they're actually making. If it costs you $100 to remove it and you only got $10 worth of profit in there, you're down $90.
Yeah.
So small players trying to play the liquidity game. Now this will change with PulseX. That will change. And what I'm saying is it would be right for the OA to increase the pool size over there so that they can dilute some of that, because people will be able to move their coins in and out with almost no cost whatsoever. And if that becomes more lucrative than staking Hex, then Hex kind of loses its purpose, because Hex needs to be the premium store of value on both chains. And if you're able to do that on both chains, it kind of loses its point of being a staking token if you can just draw fees from both sides, right?
So
go ahead.
No, you're saying but isn't like providing liquidity, it's very risky in terms of impermanent loss, and also if it becomes more profitable to provide liquidity because like fees, whatever, then more and more people are going to do it, and then it's not going to be because it's just concentrated.
Exactly.
So I don't think it could really threaten like the time lock.
Well, it does if the pools are not large to start with, because initially that's going to be better. And as far as is there risk? Well,
but then they'll get large. But do you like Hex and do you like USDC? Do you care? If you're planning on selling Hex, wouldn't it be better for you to just provide liquidity and remove free USDC than it would be to sell your Hex and then not have it? And that's what you can do. So you're able to provide, and you can also set single-sided liquidity. So you can literally say, look, when Hex hits 10 cents, I'm going to sell 100,000 of them. When Hex hits $1, I'm going to sell another 100,000 of them. And you can just leave it and walk away. And when you come back, if it hits those price points, the USDC is in your wallet. Mm-hmm.
You didn't have to do anything. You just come back and you collect your money. If you're setting up a two-sided range, well, it just grinds in there, right? You never remove your Hex and your USDC pairing. You just hit the collect fees button, and then that's your money, and then you can add your Hex back, and you got US dollars. So you made money that doesn't impact the Hex price at all. So when I say dumpers are dumb, I mean dumpers are dumb. They could literally extract value forever and never lose a coin, really, because they're able to collect those fees.
It's funny. It's like it's in most cryptocurrencies, like the whales are already very rich and they already know what they're doing. Like people with big, I don't know about whales, but people with like price changing money. But Hex, since you time locked and you can't sell too early, you have these people that aren't necessarily, they don't have the knowledge or the mental acuity like of the average whale, and they just kind of do stupid things. So it's like, it's like
you get too much money too fast and you don't know what to do with it, right? And you will self-sabotage, right? You could probably make $10 million, but you'll probably quit at $1 million because $1 million's more than you ever imagined. So you just quit.
Yeah.
Or you're like, it's never going to go up beyond this, right? Well, we said that 14 times, guys. 14 times. This is not new. The new is, it's down an extra 10%. That's what's new. Hex has dipped 90%. Hex has dipped 80%. Hex has dipped 75%. Hex has dipped multiple times. This is not anything new in its route. It's not. It feels like it, but that's because it's related to where you got in. If you got in the last year, it sucks because you're down. But now you're in a position where you can totally reduce. Coffee talks about reducing your break-even point and how significant that actually is. Being able to match your position in coins now and being able to reduce your entry rate to way below where you think it was. So when it does pump, you're going to have more coins. So when Hex does return to all-time highs, you're going to have more coins when it's there. You have more coins than you did to begin with when it's there if you staked. So you're going to have more money. And to think that Hex cannot do a 2x over its last all-time high is pretty ridiculous. So I just don't understand why people are taking pennies for dollars. I don't get it. It doesn't make sense to me. But of course, then again, I'm a guy who buys up a bunch of stuff, sits on it for a bunch of years, and waits till I get my price because I'm patient. I'm not looking at it like a lottery ticket. I'm looking at it as an investment. I know that price is going to come later. I just have to be able to wait for it. And I have to be able to tell people, no, I'm not willing to sell at this price. And in order to do that, you have to be in a position where you don't have to. That's the key. Be in a position where you do not have to sell to make your bills, and then you have that freedom to wait for your price to come.
Yeah, very important. That's a very important point. And a lot of people, it's people overinvest, and then they're the ones that's flooding everyone's bags. Interesting. The change in sentiment and like people's opinions with the price differences. So, for example, I remember when Hex was at all-time highs or was at 30 cents going up, Richard Hart's a genius, the outrage marketing. Oh, look at the watches, guys, everybody. Look at the watches. Oh, he's so cool. Look, he's gotten this Gucci. And then like price goes down and it's like,
he's selling on it. It's him. No analyst, right? Just, it was him. You guys realize like he had like over 1% of the Bitcoin, right? You know that, right? Richard had over 1% of the Bitcoin. Go do some chain analysis. You'll figure it out. He sold a shitload of them at $65,000. Go do some chain analysis. Figure it out. He does not need to sell Hex. Sorry.
No. And
why do you think he was always like, he's got 1%. He's got 1%. He's got 1%. He never mentioned he did.
And everything, all the trading volume is on chain. Like it's the most
you can't hide Bitcoin, man. And what's funny is these people are supposed to be experts that are accusing Richard Hart of selling Hex on everybody's head to buy his watches. They're supposed to be experts, and they can't do some simple chain analysis to trace Bitcoin, the most freaking traceable Bitcoin on the face of the planet, to understand. Guess who sold the top? Come on, guys. Look at the addresses that sold the top.
Wait, you're saying that Richard Hart?
The wallets are.
You're saying Richard?
I'm not even going to get into it. because I'm not going to tell them how to trace it because it's none of the damn business.
You're saying Richard Hart sold the top of Bitcoin?
Yeah, he did.
The first or second?
First one.
First one. How you're saying because he owned 1% of the Bitcoin and 1% of it was sold?
I'm saying because those wallets have a lot still.
I'm confused.
All right, look, you can look at the wallets that were smart enough to split up and claim their hex. You can look at those addresses, okay? Number one. And you can see that those addresses also sold the top.
Okay.
You can calculate and add them all together and find out how much Bitcoin Richard really did have. Okay? And it will shock the hell out of you.
Wow.
But I'm not gonna sit here and try to explain how to come up with all the addresses and stuff because first of all, there's no need to dox anything. But there are plenty of events that only people that knew about Hex or how Hex actually worked at that period of time would have behaved, and those addresses are pretty much most likely Richard Hart.
Okay, so, fair enough.
And if they sold the top, it's pretty much confirms.
Did it make the top?
Do what?
Did it make the top?
Did it make the top? Yeah, I think it made the top.
Did it make the second top?
But I mean, really, guys. Okay, let's go back in the Hex history. Silly whale penalty. Silly whale penalty was if you had too many coins that you got penalized for it. Smart whales would split it up in multiple addresses to prepare for this, and they would know to prepare for this before Hex launched. So certain wallets would have done some splitting before Hex was launched in order to do their free claim, because Hex was given free to Bitcoin holders, and at the time, Richard was already a very large Bitcoin holder. Okay, there are ways for you to find out how much he had and how much those wallets sold at the top if you really want to get into it.
Okay. There you have it.
But I assure you, but look, let's pretend Richard never owned Bitcoin. Let's pretend Richard was never rich. Richard raised damn near $2 billion in Pulsechain sacrifices. So literally, he can spend $1 million a week for the next 40 years. I don't know why you would need to spend $1 million a week for the next 40 years, but he could without making any interest, any yield, any other income whatsoever, and then never have to sell a Hex.
Yeah, that's true.
So if Richard spends $1 million for the next 40 years, a week for the next 40 years, then we might have to worry about in 40 years from now that Richard might sell on our heads. But you know what? I'll be dead by then, so I don't care.
So that's one of the things that I said. Basically, yeah, people that say, "Oh yeah, Richard is just selling on everybody," or like all the people that got in early are just going to dump.
And he laughed and said, "Yeah, well, I sold something."
Exactly. No, but like everyone says,
he sold something.
Yeah, true. Bitcoin. But like everyone says, oh yeah, but the people that got in early are going to dump on the people that get in after. It's like there will be selling, obviously, but the people that are saying that are probably plebs because they don't realize that once people have enough money, they're less prone to selling. They're not thinking like you
because you can provide liquidity and get fees and get paid without ever selling a coin.
And you could provide liquidity. So anyone watching that has a lot of Hex and is thinking about what do you call it? The fat finger on the sell. Like consider playing the whale game. Whales do not market sell, and they extract value through providing liquidity. Especially, we have decentralized exchanges now. Whales have the ability to extract liquidity. So why not do that?
You can take out your USDC and play with that.
Yeah,
keep your Hex. Why would you do that? Like literally, it's free, and it's worth $1. Why would you do it? It doesn't make any sense.
Yeah,
and it's credible. But see, here's the thing, right? So Richard doesn't like. Nobody likes to talk about this because if the pools get really big, then it's harder to move the Hex price up. right?
Yeah.
So nobody likes to talk about this, but the reason the reason we cascaded down here is because one of the large whales just removed his liquidity and sold against himself. That created this cascade effect because he removed the liquidity, then sold against himself, and that really started that cascade. And then, like I said, the sacrifices, the extra coins, the different ways of splitting your money, all of this stuff has all led us to where we are right now. It has really nothing to do.
So maybe I could challenge that sort of in the sense that, like, could we say that had it not been him, it would have been somebody else? Because, I mean, there is macros matter, and, like, going up 10,000x, you need a correction, and the rest of the market and the bonded and liquidity to other things, like someone else would have probably done it if not for him. It's just healthy to have like a correction like this for people like me getting in. You get the opportunity to, we're thinking longer term, and obviously people like me, in the sense that they're getting in late but that have a lot more money, are getting the opportunity to really get in on this and benefit. What do you think about that? Is that a fair thing to say, that macros matter to an extent?
They do, but there's never been a system with the penalization and the deferred inflationary. So Hex has a truth engine and a deferred inflationary model.
Yeah.
So the inflation actually gets pushed out into the future. And because a large majority is staked, there is only so many coins that are floating around that could really actually do damage. It's different, right? So it's like trying to say a car with a turbocharger is going to behave. It's going to behave different than a car without the turbocharger, right?
Mm-hmm.
You're going to be able to haul more with a van than you are with a sedan. There are differences in the design that have not been here before, and there are also differences within our own little ecosystem of things that are being built here that are not that nobody else knows about. So, like everything that's been built in the Hex ecosystem is very Hex centric. So it's kind of created this own little bubble where we've got this behavior happening in this bubble that has been somewhat detrimental to the price, while this macro market is going on out here. Where the macro market affects is if nobody's buying anything, then nobody's buying anything. That's where the macro market affects. But we do have kind of this own little bubble that we have, that there are things going on in here that nobody knows about. The only people that know about are Hexicans. Do you think anybody outside of Hex really cares about Pulse Doge? Do you think they care about Hedron?
Yeah, by the way, that's another reason. Let me say quickly why I don't think they're going to do so well. Their onboarding is not seamless. You have to get Hex, Pulsechain, and PulseX. You have to get that, and then now you have to. It's like Hexes. You could get access to anyone.
It's an add-on. It's
Yeah.
an add-on. So it's like you can play the game without the expansion sets, and these are expansion sets for more advanced users that want to play a more complicated game. What people care about, I'm going to tell you what people care about. You want to know what people care about?
What do
This is
people
what people care about. What button do I push to make the money come out? That's
True.
what people care about. They want to
That
know
is
what
true.
button to push to make the money come out. They don't want complication. They don't want explanation. They don't want. Smart people love to get wrapped up in all this complexity, right? Dumb people are afraid of the complexity, and it's scary to them, right? People attack what they fear and fear what they don't understand. People that think they're experts, that are experts in what was before, because now this is new innovation, they don't understand it. It doesn't fit within their box of spectrum and their known knowledge. So it's beyond their known knowledge. So automatically they're going to dismiss it or they're going to attack it.
Yeah.
One or the other. Because it's too complex. It's beyond their understanding, right?
Yeah.
It's like primitive people seeing fire for the first time and going, "It's sorcery." It's
True.
really that much, man.
Yeah.
If you went back in time with your cell phone, they'd lock you up and say you were an alien, right? This is what happens when the old meets the new.
Yeah.
So really, if anything, the resistance that Hex has received builds my confidence in fact that this is something that's truly disruptive to the system as
Yeah.
we know it. This is true
Yeah.
innovation. This is true change because people attack it.
Yes. Well, here's
They're afraid.
yeah. I could. That was beautifully said. I would not even want to try and explain in my own words because I can't really, you know, articulate
You
it
can
that
borrow
well.
mine.
Yeah. No. What he said. What he said. but yeah, John McAfee talked about that, like when he was talking about Monero. He was talking about how like people thought that the telephone was for mobsters and cars were for bank robbers, and
Yeah.
in the early days people thought that Bitcoin was for drug dealers. They just
Yeah.
didn't understand it, and that's very indicative of Hex being something that is going to go like way crazier than perhaps we could even imagine. But here's the thing that bothers me is that like you have these other tokens that come out, if you know what I'm talking about, you know what I'm referring to, that people attack, and like, and this is why Richard can't, call out these scams by name, because people think, oh look, that's what happened to Hex in the beginning. People were attacking it, and it's like,
Two
so it
totally
must be
different
this is going
designs.
to do a 10,000x.
Two totally different designs. One
But they
was
don't
not
check under
designed.
the hood.
One was not designed to do. Well, it was never designed for the purpose of price appreciation. It was designed as a social experiment, and it worked because everybody abandoned the principles that they supposedly have learned and went the complete opposite direction over the next shiny object. Congratulations, you failed the IQ test.
Yep.
Sorry.
Yep.
Socialized systems do not work. If you
Yep.
do not have a limitation or a reason for purchase, then you are leaving out some of the fundamentals. Many people have tried to make things to outperform Hex, and they thought they changed this or they changed that, and they tweak this and they tweak that, because if you give people an option to make a change, they will. Here's the problem. Hex is the perfect recipe.
Yes.
Now, y'all can point at me and go, Hex Maxi, he doesn't want us to succeed. Guess what? I want you to succeed. I want you to know the difference in design, and the reason why Hex works and other things don't is because the design of it is what allows it to do so. The truth engine, the dynamic deferred inflationary model, it's necessary. You don't just inflate to oblivion. You are actually pushing those coins out into the future. The truth engine. The truth engine is required because it requires you to make a commitment, a solid commitment to yourself. If you do not, it just undoes your progress. There's a reason to buy Hex. Why is there a reason to buy Hex? Because you need Hex in order to purchase your T shares, in order to produce more Hex. You can't just stamp a button and make it happen. Because if everybody could just stamp a button, they just, look, it's like putting a money printer in everybody's house. Okay. If anybody could just grind the wheel and just pull off as they need, guess what? It doesn't work. There has to be some kind of incentivized behavior and some kind of action required in order to be entitled to that new inflation. You can't just skip straight to we're just going to leave everything else out and this is going to work just fine. It doesn't work that way. The reason Hex works is because of its design. Its design is perfect. Its design is self-balancing. How people are treating Hex is not so perfect. But the design itself is, and it will survive the test of time, where these other things that are just other experiments may not do so well. But you know what? You don't know something's not going to do so well until you see it.
Yeah.
But I can tell you this, most things in crypto do fail. Default fail was the smartest thing that people could do when they looked at Hex. Default fail would have saved them a lot of grief on everything else. But default fail was wrong about Hex because something has changed. The innovation has changed. The design has changed. They think it's something that's familiar to them, but it's not. It's something they haven't discovered yet.
Yeah.
Right? And that's the difference. A lot of this other stuff, we've seen it before. We've seen it before. A lot of stuff that is invented is repackaging, repurposing of things that have already failed 3 years prior. You see repackaging of Safe Moon all the time. Safe Moon wasn't Safe Moon. Before Safe Moon, it was proof of weak hands.
Unsafe Moon.
before Safe Moon, it was proof of weak hands.
Yeah.
Okay. Before that, it was something else. But they repackage and repurpose these same narratives, and then sell it to the next group of people that haven't experienced that yet. And that's how the crypto space works, and that's why these things don't last.
Yeah.
Hex
So
has lasting power because it really is designed different, because it's not designed as a company, and it's designed by somebody that wants nothing more than life to have unlimited bragging rights, to be right, and to shove it in everybody's faces for the rest of the days he lives on this earth.
true.
That's why. And he will do anything to make sure that he keeps and maintains those rights, because that is something he cannot buy.
Yeah.
You can't buy unlimited bragging rights.
Yeah.
You have to build something that you can brag about beating the shit out of everything else. And it has to beat the shit out of everything else for you to maintain those bragging rights. So you're going to do everything that you can to support that and make that work so that you never lose that ability. Do you really think Richard's ego is going to allow the haters to be right indefinitely? Is that possible? I don't think so.
No. That's the thing. Like, you could copy every single feature of Hex, but could you copy the fact that the founder's a billionaire already and doesn't have incentive to pull the rug or extract liquidity from his community? You can't.
And values bragging rights
And values bragging rights. And he's
more
just a
than
good
anything
dude,
else.
just a good person, who likes to put people that are full of BS in their place, to a point where it even, you could say, hurts him, on the larger stage. I
Oh
think that,
yeah, because the space is full of scammers and they don't like being exposed.
yeah,
They don't like to be the man behind the curtain pooping on the toilet when he's pulling back the blinds. Right?
yeah,
Yeah, I mean that's really what it comes down to. It's like he's exposing people for who they really are. He's exposing the fact that they're not as knowledgeable as people would like to think that they are. It's like saying you're a rocket scientist and then starting to talk about rocket science, and then a rocket scientist actually walks into the room.
yeah,
You know, people have a lot of ideas on why they believe things do what they do, because our brain likes to fill in the blanks and we like to
yes,
feel like we have answers to questions that we don't. But the reality is that there are people that do know how to do things. And in the crypto space, mediocrity has been rewarded, not meritocracy. So in the crypto space, all they had to do was bounce from one narrative to another, create the new shiny object, shill it for a couple weeks, and then move on to the next thing. Nobody actually fundamentally wanted to build something that would last the test of time, because there was no incentive to do that, right?
yeah,
So if you're making cheap drawings of a stick figure and you're selling those all day long, why are you going to bother painting a portrait? You know, why are you going to put your time and effort in building a portrait if nobody wants to buy it when you're able to sell stick figures all day long? And that's what happens in the crypto space, is people are more than willing to pay a little for stick figures, but they don't want to pay a lot for a portrait. And then there's no incentive for anybody to improve their skills any better than drawing a stick figure, because that's what's selling. That's all.
yeah. And listen, if I were a pay to play influencer, like taking coins and stuff, I would keep the hell out of Richard Hart. Like, I would not. He's not coming on my space, and
No,
he's
it
certainly
destroys
not
your
coming
whole
on my
business
show.
model.
Absolutely
Yeah,
not. Yeah, people have to realize that what gives people that are into cryptocurrency, like, what gives them, life-changing wealth is price appreciation. But that's not what these influencers, that's not what they benefit from. They benefit from leverage trading,
cash flow,
affiliate links. They
cash
benefit
flow.
from sponsors. Like, yeah, no, but that's the great thing about Hex, is like, what benefits me is what benefits you, what benefits
Yep.
you guys, right? Like, I was a staker, before I started streaming, and now I come here, and I'm saying, whichever I get, like, these emails. This is how I know I'm going somewhere, is that I get these emails. Like, a lot of the Pulse Blank companies we want to have the dev on your show. They'll be you'll give us your wallet. There'll be financial compensation, whatever. It's like, when that price goes up, your financial compensation is not going to outcompete my T shares. Let's, like, leave it at that.
Yeah, and I mean, why? So I don't understand the selling your opinion. I think it's very disingenuous.
They
I don't
can't
like
delay
the idea of
gratification.
somebody paying me for an opinion. And I mean, I've had offers too. I've had plenty of offers where people are like, hey, we'll pay you to promote our thing. And I've had people offer me free coins that I wouldn't take. No obligation, just stuff that I wouldn't take because I didn't want to be under obligation and I don't need it. So, it just doesn't make sense. I think I didn't get into crypto for another job, right? And then, like everyone, now that I've gained such a following, it's like people demand that I show up and I say stuff and I do stuff, and it's like, oh my god, it's like, look, guys, look, like, you were like, John, why did you leave your Twitter? It's like, look, I never wanted a Twitter. I literally stood up to speak about things that I didn't feel were being addressed, and I didn't want a Twitter. I never wanted a Twitter. Uh, and originally, I was just kind of talking with my friends, and I still treat it that way. Just a whole lot more people have shown up now, and that's a lot more people expecting me to talk to them every day. And in all actuality, it's like, look, guys, I'd like to go sit on a beach with my toes in the sand and just throw away my electronic device. Shit, I don't even like it when my website goes off and I make orders. People are like, well, what's your website? We'd like to support you. We'd like to buy stuff. It's like, I don't even want to tell you about it because then I'm going to have to pack your order and I'm going to have to ship your order. And I don't want to work at the post office. That's how much I want to work right now. So it's like, it's frustrating to me because, again, that was the business model of the influencers is they're making cash flow basically off, and this is not really, it's bad because it's harmful because it affects people's finances. But in all actuality, this is how the rest of the world works. The rest of the world works just that way. There was an excerpt from Wayne's World where they were talking about sponsorships, and they do the Nuprin, little yellow different. And they did the Nike and Reebok, and they did the Coca Cola and the Pizza Hut, and they're doing all this stuff, right? For their sponsors. Well, why do you think like boxers have like logos and sponsorships and arenas have sponsorships and all this
FTX
stuff?
Arena.
It's normal, but I'm saying it's normal. It was normal advertisement. There was Coca-Cola Arena or whatever. I mean, this was normal type of advertisement. Sponsorship method is way. What makes it different with crypto is these are financial things that people are investing in because they're trying to make money, and that's what makes it different. And then you've got people that are leading them not to buy products, but to buy things that they think are going to make them money, when in all actuality there was never really there was pre-allocations, there's pre-distributions, there were all these things that were working against them from day one before they
Yes.
even heard about the
Yes.
coin. And that's where the problem comes in. But the business model is not exactly corrupt because it's what the world does.
Yeah.
You know,
Equities.
so you can understand where these people got in 2017, and perhaps they didn't realize what kind of harm they were doing. They were being paid like journalists to, promote things, and they didn't really probably think about the harm that it did. And nobody really started beating them up about the harm that they were doing until those damn Hexicans showed up, and we started holding people accountable because we knew there was something different now. And that's why a lot of these influencers, if you got Hex in your name, they're going to block you. You're better off going stealth and becoming your own person and stop waving your Hex flag, because that's going to allow you to actually have conversation and be able to engage and start talking about the things that matter. Uh, because they're just going to block you. They don't want to hear that their job is causing harm. They just want to collect a paycheck. They don't want this thing of conscience getting in their way, realizing that a product that they may have served up to somebody is causing damage. No, they want to say, hey, I got paid. I talked about this thing. It's a great gig. I got paid to talk about this thing. That's what they want. Well, that is the business model. That is the business model in the world. There are review channels. There are video game reviewers. There's all these different things. Crypto was nichey because nobody was really talking about it. And so in 2017, people didn't need it. There was no requirements. All you needed was a camera and a microphone. You're good to go. right? There were no experts. There was nobody to tell you you were wrong. There was nobody to fight against you because, as far as anybody was concerned, you knew more than they did. So you were giving them education, and you felt good about giving them education. You felt good about teaching them about coins, about where to look, where to find them, you know, how to set up your wallets and stuff. You felt good about that, not realizing that it caused harm, not realizing that over time that people use this network to shill their garbage in order to make, you know, money and move on to the next thing. So I don't think all influencers are bad people. I just think that they probably didn't think about the consequences of their actions. And now, because the Hexicans up in everybody's feed and holding people accountable for the things that they said and what they did, that's where we're at now. And they don't like us because we do know what the crypto space is about.
Yeah, no, that's beautifully said. The what worries me is that it used to be like, I mean, now that Pulsechain launches, you have all these people that they originally were all in on Hex and PulseX, and they were shilling it at 20, 30, 40 cents, and then it goes down to 3 cents, and they're saying, oh, we're going to go to 5, we're going to go to 20, we're going to go to 100, we're going to go to 1,000, we're going to go to $1 million Hex. And then it goes down to 3 cents, and it's like, what an opportunity. And they're like, hey, we have this new coin that we're working on.
Yeah.
Or like we have this, it's like, so you think it's a better opportunity because I could only put my money in one. It's like, or are
it's
you
a better
just
opportunity for them?
Yes. But people are afraid to call them out. And you're really the only one that's been had the
Look, and there's
like,
a lot of
Hex
guys.
was supposed to be against that. Like it was supposed
Yeah.
to be against that. And it's like it's becoming the very like not Hex. Like Hex will always be there, but people are falling for the trap.
Well, yeah, man. It's
Speak on
like,
that.
people are like, well, why'd you quit Twitter? It's like, because the community that I knew is not the community that I have now. And, I understand why people have gone on to do this. A lot of it's out of boredom. The other thing is maybe they don't have as big enough position, right, as they would have liked to have. But again, it's like you could buy mining equipment or you could buy Bitcoin. You'd be better off buying the Bitcoin than the mining equipment. And eventually the mining becomes so expensive that nobody can do it. It's not profitable for anybody to do it. And people aren't that forward thinking to realize that this is just not the way forward, and something that is pre-programmed to do what it's supposed to do is the way forward. But yeah, I mean, it's frustrating to me because there are a lot of people that I like that have gone on to do things, and I don't necessarily agree with that. I still like them as a person,
Yeah.
uh, but I don't agree with it. You lose me when you start screaming Hex Maxi, though, because when you're screaming Hex Maxi, what you're saying is your product cannot stand on its own. Therefore, you have to attack other people, blame them for your own shortcomings.
Yeah.
That's what Hex survived the greatest of all scrutiny, the greatest of all gatekeeping. And if you want to immediately start attacking the community that made you,
Yeah.
then guess what? Maybe the problem's you. You know, and that's what's really frustrating. So those people usually get blocked. And usually it's a big red flag for me when people start making excuses for their coin before the coin's even out.
Yeah.
So when they start making excuses for their coins about the Hex Maxis are going to hold me back, well, guess what? Hex has been gatekept. Hex has been exposed to the greatest amount of scrutiny. Hex had paid influencers screaming against it at the top of their lungs, and it still survived. So don't blame other people. Focus on your product, make your
Yeah.
product work, prove yourself over time. Don't blame others for your inability to produce results.
Yeah, it's a great point. And it's interesting you're saying how like you were sort of disparaged in a way that you wanted to leave Twitter because it's not the place but it's more important that you stay and you keep being
See?
yourself
And
because
this is how I get stuck in the
if
trap.
you
This is
leave,
how
if
I get
people,
stuck in the trap.
yeah, exactly. No, because if people like you leave, then it will only stray further. And I think ultimately everyone's going to be brought back by the failures of the vast majority of these projects because
If they have anything left.
yeah, and they're just going to go back. But the cycle's got to end, man. I guess, you got to save whoever you can. is what I say. And I think
there
it's
will
just
always be new shiny objects.
yeah, true.
There will always be new shiny objects. That is never, ever, ever going to change. And this is where, look, here's the thing people don't want to admit. Bitcoin maxis, for the most part, were right. Why were they right?
Yeah.
For a long time.
Because
most things did fail. It made them look golden. It made them secure in their position. But what it did was it also made them comfortable that nothing is ever going to change. Right? Because nothing up to that point has been successful, really, other than, like Ethereum, right? Nothing had really been successful, really. So it just proves their point, and default scam is the best position to have because it's going to save you from 99% of the things that are going to fail and not going to work out. Next up, you are not going to be able to catch every opportunity. No matter what, you are never going to be able to catch every opportunity. If you are chasing every shiny object that comes down the lane, you are going to lose 9 out of 10 times, guaranteed. You're going to lose. If that one thing happens to outproduce that other stuff, then you're doing okay. That Adam Stokes guy, he does that where he likes to split amongst X amount of things, and if the one thing does really, really well, it accounts for the rest of the loss. But why is loss necessary? Why do we constantly accept loss as necessary? It doesn't have to be that way. I know something where I never lose. I gain coins every day.
Yeah.
Does the price go up and down? Yes, but I never lose. The price goes down, yes, but I have more coins every day. What do you leverage trade your Bitcoin for? More Bitcoin. That's what you leverage trade. You're trying to get more of that thing. But we've got something where you've got zero risk. You get more of that thing. The market value of that thing is determined by the open market, but your number is always going up, never down. It's always going up when you're staked.
Yeah.
Never. Nothing else. Never. Yeah. I mean, come on. It's frustrating because people are taking unnecessary risks.
Yes.
They put themselves in a position where they can lose it all because they feel they have to gamble it. They have to do something. They're compelled to action. They have to take some kind of risk because it just doesn't feel natural to win every day and never lose. It doesn't feel natural. It's like there was a Twilight Zone where there was this casino where every time somebody pulled the slot machine, they won. And it was supposed to be like a version of hell. Because there was no way they'd lose. They just won. They only won. And it was like one of those versions of hell. It was incredible. When you think about it, again, we are our struggles. And when we don't have struggles, we start to create them for ourselves.
True.
To keep ourselves entertained.
Yeah.
It doesn't feel natural for things to be easy. It feels natural for you to have to struggle. It's just how we're programmed.
Yeah, not all very true. And I guess we got a $5.55 chat from Bob Lagai. Thank you so much. This is Furu Finance. Has anyone seen Francis? Who's this guy?
He wants the Francis character.
What's the Francis character?
You don't know the Francis character? You call yourself Furu Finance and you don't know the Francis character?
I don't know the Francis character.
Let me go see if Francis is available.
Who's this Johnny guy? We want Furu's only one. Okay, thanks for the chat. Meanwhile.
Hey, look, I am the epitome of the Furu. I am the embodiment of all Furus out there, and you are right. Finance here.
I see.
I am Francis. I am Francis Finance. I am the embodiment of all things crypto.
Okay, I've seen that on Twitter.
Link down below.
Link in the description. Next big move. Oh, so I was thinking also like, yeah, these Bitcoin OGs do gatekeep, and I was thinking like, I don't even blame them because everything else, most things do suck, and also like why would they want something else? Like they already gotten like super rich from Bitcoin. It's like why should they take any risks
Well,
in that sort of way? It's
well,
like,
yeah, Warren Buffett will never own Bitcoin. Why? He doesn't need to.
doesn't need to.
Right. So and Hex, there are people that do not need a shiny object. You are now marketing to somebody who's already found something that works, and they don't really need anything. How much do you need? How many millions do you need, guys? How many millions do you need to retire? Is it really necessary to take a risk on something new?
Yeah.
If you got something that is consistently working.
Yeah.
I mean, so what it does is it actually causes detriment to the people that don't have large enough bags, that think that they're going to get something else to outperform, the other thing, and then they end up splitting themselves in multiple directions, and then you're in that, which has more risk,
but
which is proven, which isn't.
Yeah, but Johnny, we don't want PulseChain to be a ghost chain. PulseChain
will not be a ghost chain.
PulseChain needs these projects in order to develop. What is your response? In order to be successful?
What Ethereum start with? Exactly. No, you don't need all these other shiny objects to get people's interest. And more things that suck do not create a better experience. Binance chain had all kinds of rug pulls. It was Rug City over there, man. You could buy anything over there. Guess what? I never used Binance. Never. Not even once. You know why? Because it was Rug City over there. It had a bad reputation to be in Rug City, so there was really no need to utilize it. You know what else? They didn't have Hex over there, so there was no reason to use that either.
Yeah.
So what I have to say is, look, when in history has the people that welcomed the newcomers into their community worked out? When in history has been the kumbaya, everybody come here and shit on us, ever worked out in history?
Okay, so Ethereum this past cycle did let I mean there were projects that built on it that benefited, but this is why this leads me to my point, what I wanted to say. So I agree with that, though. I do agree with that. Like it doesn't help. But with regard to blockchain, let me say this is the Furu take a little bit that I haven't heard said. It's like people are like, but we don't want PulseChain to be a ghost chain. We don't want we need development. We need building. We need building on the PulseChain. So here's what I say. It's like, first, maybe for continuity, maybe to last 10, 15, 20 years. Yeah, you do. But first cycle for Cardano, first 2 cycles, 0. First 2 cycles for Ethereum, 0, right? Avalanche, this bull market, 0. And PulseChain is not the exception. And what I'm thinking is like, if you really want a project, you have an idea, something new, something that you don't have to piggyback on the PulseChain brand that Richard Hart created. You don't have to make your coin in a hexagon and make it pink, red and blue, and add the pulse prefix, to your ticker. If you really have a novel idea that could in fact beat PulseChain, why don't you make it in 2 cycles from now when the returns diminish, right? And you could tell all your audience, like, hey, get in on Pulse now. Don't buy all these scams. They'll trust you. And it's like, they'll all be rich. You'll be able to create a project that raises that much more money, right? Because everyone didn't buy the shiny objects. They got in on Hex Pulsechain, PulseX. And now that PulseChain, its returns diminished, so it became a safer but less volatile asset. You have a chance of giving your community the best, at least an opportunity of beating the market, like Chainlink this past bull market. You know what I'm saying? Like, what do you think about that?
I think that we're not welcoming is an excuse for failure. That's what I think. I think coins that immediately start saying that we're not welcoming or we're trying to prevent them from creating is already setting up a narrative for the reason why they're going to fail in the future.
That's actually a very good point.
And
that's an amazing point. But
we
about what I said,
we cannot stop you from building. And you may never get our money, So what does it matter whether or not we buy if you have a good product?
Correct.
This is just a poor argument. So what
Yeah.
it is it's an attempt to draw empathy from the experiences that we've had with the gatekeeping of Hex, and saying that we're treating others like we've been treated, to garner empathy, again,
That's beautiful.
to create a narrative
It's
as an excuse for why
manipulative.
they fail in the future.
Manipulative.
It's manipulative.
That is it.
Absolutely. So and we're supposed to have sympathy, and we're all a group of people that do care about other people and their success, and therefore they're preying on that empathy in order to give them a chance. Well,
Yeah.
guess what, guys? You put a Pulse logo on it, it does not give you a free pass. In fact, if you put a Pulse logo on it, you are subjected to a higher level of scrutiny from higher, people that are much better trained at spotting things than you would be somewhere
Very
else.
true.
So if you want to come along and you want to scam and and you're afraid of resistance, then don't build. If you are afraid of resistance, then you got no business building in to begin with. If you're going to
Yeah.
make excuses before your coin is even built, you got no business building to begin with. It shows that you don't even have confidence in yourself. You don't have confidence in your own product.
That's
If
a
I
beautiful
build
point.
something, I want to put it out there and I'd say, tell me, how does this fail? Because when we got into Hex, that's what we did. We gathered together and we said, hey, this thing looks really cool. How does it fail? Why am I not seeing failure here? Why can I not poke holes in this? Why can I not sink this boat? Because we all came in looking at it like that. We were not the moon boys. We had to resist the greatest FUD. We had to try to poke holes in our own ship to see if this thing was really battle tested, if it has the capabilities to do what it's supposed to do. But here's the thing, guys. Look, we can't stop people from building on Pulse. We're not trying to stop people from building on Pulse. That's a big ass excuse. We can't. There's nothing we can do about it. All right. So opportunists are going to go where the opportunity is, regardless. Okay. If anything, our protectiveness of our own community should discourage more scammers and should encourage people that have good intent. If who's it going to stop, right? Is it going to stop the people that really have good intentions from building because they're afraid that they're going to get a little resistance on the way? I don't think so. Who might it stop? It might stop some of the scammers that are afraid to get called out before they even get their thing on the market. That might bother them a little bit, right? So is less people that may not have good intent, are we really so tainted that people don't, we're the toxic ones, they don't want to deal with us? First of all, you also go where the money is. Obviously there's money in Pulse Chain. You think opportunists are not going to want to be where the money is? So this whole idea of it's going to be a ghost chain or people won't go here because Hexicans are mean is just ludicrous. This is a lot of excuses. It's a lot of excuses generated by people that don't have a plan. So their plan is to make drama and hopefully make sales off garnering that empathy. That's what that comes down to.
That
And it's
was
sad.
that was beautifully said. And let me just add a little bit to that, if I may. Is that like when these Bitcoiners in the beginning, in its inception, you have the people that were like really in it, like what's his name, Gavin Anderson and Chase Myers and Eric Voorhees. What's his name? Bitcoin Jesus, Roger Ver. These
Roger
people
Ver.
weren't ridiculed. They got probably they didn't even get the dignity to be ridiculed by TradFi. They were so fringe. And
Oh yeah.
they and look what happened. Like they experienced success beyond anyone's wildest dreams. Look at Vitalik when he broke off from Bitcoin and made Ethereum. Look at Richard Hart when he broke away from Bitcoin and made Hex. Like these people were really serious people about something. Which, by the way, the fact that they created something original and made their own brand and their own logo and things like that, that's already more indicative of originality and being serious about themselves and whatever. But in any case, you think they let it stop them? You think they cried and moaned? Like, no, they didn't do that. Like, they moved forward because they knew in their head that they were special and they had something special to bring to the table. And if you really believe that, if you really believe you have something that's revolutionary in the way that the automobile, the telephone, the Bitcoin, the Ethereum, the Hex, if you think you have that next big thing, then I don't want to hear you moan and cry about it. Yeah, I like exactly what you said. Yeah, that's beautiful.
No excuses.
No excuses.
No excuses. If you want to innovate, you want to be an innovator, you want to be successful, you have to go above and beyond all resistance. Even building a business, you're going to get resistance. Anytime you develop anything that is challenging to the market, you're going to get resistance. I mean, I know I'm a product developer. I've had people threaten me because I developed something that challenges their product. So anytime you have innovation, you have to expect that. That's part of the gig. That is part of the gig. The most rewards are pushing beyond the most resistance you've ever experienced. If you are unwilling to push beyond that resistance, then you're going to fail.
Yeah.
Period. And you do not deserve the rewards that are beyond that resistance because you didn't have the ability to push beyond it. And nobody's handing you anything. There is no entitlement here. Just because you're part of the community, just because you put a Hex badge on, does not give you a free pass. You don't get to put the hat on and go, I'm one of you guys. You got to listen to me and buy my stuff and watch all my shows and click on all my stuff and like it all and pay attention to every damn word I got to say. That's bullshit.
100%.
That's bullshit. And and I got into it the other day with somebody because it's like, I mean, it seems like entitlement or something, right? It's like, well, you don't watch my shows. I'm like, no, and I'm not watching them now either. It's like, look, I've got the right to agree or disagree with whoever. I've got the right to be on whatever shows I want. I've got the right to say whatever I damn well please. And if you don't like me, then piss off.
Yeah.
Not my problem. That's yours.
Yeah.
But
well
I'm not going to have people demanding shit of me.
Mm-hmm.
I ain't getting paid for this.
Yeah. Beautiful.
I ain't anybody's bitch. I ain't on anybody's payroll. I run my own company, make my own money. You know, I haven't worked for anybody for years and years and years. I ain't going to start now.
Yeah. Yeah, and hey, if it's good, maybe Johnny Chaos will wear the cap. If your idea is that good, or maybe I will. Who knows? But chances are I won't. You mind if I just step out for another 20 seconds?
He's got to pee again.
Yeah. I drank too much coffee and the seltzers and then the tea. It's like
we had a pre-talk and go.
All right, here, I'll leave you with this.
I'm stalling for you. We had a pre-talk and he's like, "Oh Lord, I'm gonna need the cup of coffee to wake up for this." So how's it going, guys? In comments, look, I'm looking at the comments now. How goes it? How many people we got in here? That I can't see. I can't see the count of how many people we got going here. Even Hex Squids. Be right back. Toilet. Yeah, each thing is designed, and each thing has potential problems and things, and people don't like it when you point out flaws. One of the major flaws in Hex is the fact that it's dependent on the Ethereum gas cost. One of the flaws is onboarding is very difficult. Because if the Ethereum gas prices are high, then it costs a ridiculous amount of money to onboard. And if you're only trying to do small amounts, you can't afford to do so. So does Hex have problems? Yes. They're generally Ethereum related problems. And hopefully we'll get the improvement. And that's part of the reason why we're getting Pulse. So do I think everything's perfect? No. Do I recognize innovation when I see it? Yes. especially when I see great amounts of resistance, and listening to people repeat the same arguments that I had about Bitcoin when it first came out, and I didn't understand it. Pretty much says, "Oh, where have I heard that before?" Oh yeah, I said it. And I didn't understand markets. I didn't understand values back then. I didn't understand how somebody could want a digital asset, or what value that digital asset could present. I also didn't quite understand the money system, and how the fact that it was just printed into oblivion, and it wasn't really the inflation. It was the fact that they were just handing it out to all their buddies, and they got to hand it out and print it, and I got to work for it, and it really wasn't fair. So
it's a big club and you ain't in it.
big club and you ain't in it, says the George Carlin.
Oh yeah. I guess let me is there a hard stop that you need I think we have till 3 technically.
We have till 3, and I'm gonna let us close this out, because this is a lot, man. There's a lot of stuff we spewed today. So.
Oh yeah, okay. So I guess I appreciate you coming on. Thank you so much.
Well, thanks for having me.
It was really a pleasure talking to you. And I hope we could do this again. So
someday, I'm trying not to do these shows, man. I'm really trying not to.
Johnny Chaos is the hero we need, not the hero we deserve. Oh, that's what they said in Batman or something.
I keep trying to hide, and people won't let me. and really, guys, look, this is all just common sense stuff, I've got almost 30,000 tweets that you could scroll through where my message is really not changed. It's not gotten any different. I find myself just repeating myself because it needs to stay on top of mind awareness to kind of bring these issues out, because it's like everybody runs around with a goldfish brain, and if it's not constantly in their face, so I'm just repeating myself redundantly a lot, and I'm just kind of tired of, but there are new people that can take, the content that I provided and carry it forward, and that would be great.
Yeah.
Just take some of those talking points, have deeper discussions about it. Maybe I'm right. Maybe I'm wrong.
We could hard fork Johnny Chaos's
sentiment. Hard fork, guys. Hard fork. Take some of that knowledge. I put it there for you to carry it forward.
Yeah, Furu Finance is a soft fork. Furu Finance is a soft fork of Johnny Chaos.
I didn't intend to be a leader. I intended to give you guys tools that help you become leaders.
Yeah, well,
and that's what I want. I don't want to be the personality. I want you to take some of this information, expand on it, and make it your own.
Well, some people, I guess the best leaders, you could even say, they don't want to be the leaders, and just the moment calls for it. I'm not trying to pressure you, but I am staying.
What about what Johnny wants?
Right, there was the thing with George Washington. He didn't want to be the president, and they said you got to, they made him step up, something to that sort, right? It was, he left the room. I don't know exactly what it was, but
you guys got Richard. You got what you need.
We have no expectations from the work of others, but I guess that would include you. But I guess I really, really appreciate you taking 2 hours and 28 minutes, and you got so much viewership. I mean, that I'd like to think it's because of me, but it's not because of me, because I come here. I'm, by the way, just I'm on every day, every Sunday through Friday, 12 p.m. Eastern time, streaming. But I do, it's not going to be the same now. It's like,
give him a follow, guys.
Yeah, give him a follow.
He covers some really good points. He agrees with a lot of the stuff that I say. So give him a follow, show your support.
Yeah. And
if he gets out of line, feel free to slap him around. Okay.
That's right. And that's what you're there for also. But we hope you don't step aside, because it really is not the same. And yeah, I feel like tomorrow it's going to be so boring compared to today. We'll make do. We'll make do. But Johnny, thank you so much. Just thank you. And please like and subscribe. please follow at CCFX Studios on Twitter if you haven't already, which I'm sure you have, and follow at Furu Finance. And until next time, thank you so much. Have a great day.